So, good evening to one and all present here. On behalf of Madurai branch, I welcome all the members for this third day meeting on comprehensive program on GST. And I wholeheartedly welcome our today's speaker, CA Venkataramani sir, all along from Bangalore. And we thank you for accepting our invite, sir. CA Venkataramani sir's core area of practice is indirect taxation, and he's been practiced in this field for so many years and having rich knowledge in the area of indirect taxation. So we have a right resource person with us today. Today, sir will be discussing on the topic key feature areas in GST annual return and GST audit focus areas today. Let me give a brief introduction about our CA Venkataramani sir. He is a graduate in science. He pursued the chartered accountancy course and qualified in the year 1988. He was in independent practice for a year prior to the joining Mrs. Singhvi, Dev and Unni firm. He is practicing in the field of indirect taxes since then and is mainly involved in indirect tax planning and representation at various levels. He is a regular speaker at various forums and has presented a number of papers on indirect taxes at the state and national level. And he has co-authored 3 books, one handbook on value-added taxes, the second on audit under Karnataka VAT laws, and the third on discussion paper on the key transitional issues in proposed GST regime. And he has served as an executive committee member of Karnataka State Chartered Accountants Association during the year 2002 and 2003. He has served as a member of the Goods and Service Tax Committee of the ICAI. And he has served as a co-opted member of the Fiscal Laws of Committee of ICAI and State Taxation Committee of Federation of Karnataka Chambers of Commerce and Industry. He served as a member of the GST Committee of the Subcommittee of SARC of ICAI. And he served as a member of the Indirect Tax Committee of Associated Chamber of Commerce of India. And he served as a member of the GST Committee and Journal Committee of All India Federation of Tax Practitioners. And he is a co-opted member and a special invitee of the Indirect Tax Committee of the ICAI, New Delhi. And he was a mentor for the Indirect Tax and State Tax Expert Committee for the year 2018-19, Bangalore Chamber of Industry and Commerce. And his present positions are: he is a member of the Fiscal Policy Institute of Government of Karnataka, involved in structuring or designing the course curriculum, the offices of Commercial Tax Department. And he is a regular faculty of the Bangalore branch of SARC of ICAI. And he is a member of the Statutory Compliance Committee of the Karnataka State Cricketer Association. And he is a member of the committee to study and report changes to the Karnataka Tax on the Professions, Trades, Callings and Employment Act 1976 and rules made thereunder, Government of Karnataka. And he is a member of the State Advisory Committee for GST, Government of Karnataka. Sir, with this brief introduction, I once again welcome CA Venkataramani sir. Over to you.
Thank you, madam. Thanks a lot. Thank you, Abhinaya, madam. Thank you, Manimekala, madam. You kept me engaged for at least 5 minutes prior to the start. I remember to have visited Madurai sometime in 2010 with G. Ramswamy. One session was taken by Ramswamy sir, and the latter part, if my memory is right, I think it was an afternoon session that I engaged the delegates from Madurai branch on the central sales tax law. Those days, things have changed. Much water has flown from 2010 onwards till now. So I wish the Madurai branch all success in all its endeavors. So before I go to today's session, the PPT that will come on to your screens now has been prepared by a good friend of mine and a colleague who worked with me, Mr. Siddesh. So I thank Siddesh for having given me this PPT. I will only be sharing that and discussing on that paper. Abhinay madam, thanks a lot for having given me this opportunity to be a part of this Madurai branch discussions. Manimekala madam, thank you so much for being. Thank you so much. In this session, probably spanning a little more than 2 hours, let us spend some time understanding the key features of the goods and service tax law with specific reference to form number 9 and form number 9C. I'm sure most of you here would have read through the technical guide that ICAI has published. It is an ocean of knowledge. Please don't miss out on that technical guide. Before I commence with my entire paper, I thought let's warm up for this session. for the first 5 or 10 minutes in trying to understand what are the key features that one must be very careful about before you commence work on 9 and 9C. So we need to know something about business. What is this business that we are talking of? The business that we are talking of could be retail, could be wholesale, could be manufacture, could be service, could be just contracts, could be none of these two, could be working on net as we now work in these lockdown conditions, could be anything. But if you don't understand business, you are not going to understand the implications of tax under the goods and service tax law. So some of the most confusing issues, some of the most important or critical issues that I consider that one should know, importantly as a professional, and secondly, before you commence your 9 and 9C, I will take up 5 issues and I'll explain to you how important these are going to be when you commence work on your 9, 9C. The first is credit notes. You will not find that in PPT. This is just a brief introduction to 9, 9C. And I will take you through these examples when I go to 9 and 9C, how difficult it is going to be for you to fill in the appropriate tables. Consider credit note. I have been in practice for 37 years. I started my articles in 1982. And as we speak now, 38 years perhaps, I've never understood this concept called credit note. It's absolutely confusing. It is completely misleading. Businesses don't understand the implications of this credit note. If you look at section 36, you can issue credit note only in respect of 4 transactions, nothing more. 1, when there is a difference in rate of tax, when there is a difference in the value of the invoice, when there is a deficiency in supply of services, and 4, when there is a return of goods. In no other case, the goods and service tax law recognizes a credit note. Your ICI may recognize credit note. Your company law and income tax law may accept credit notes, but goods and service tax law does not recognize credit note. Credit note can be issued only under these 4 circumstances. Touch your hearts. How many CS who are listening to this have touched, felt, and seen a credit note and analyze the implications of this credit note with specific reference to section 36? Is it only in respect of these 4 classes of transactions that this credit note is issued, or is it something else? Now consider this. Credit notes are issued for discount. You forget the council circular which said that there is something called financial credit note. In my lifetime, I have not heard something called financial credit note. Something new cropped up because large industries coined this term called financial credit note. There is nothing called financial credit note. It is some note, whatever note that is, we will see later. But insofar as this credit note is concerned, credit notes are raised by business entities under certain circumstances for various transactions. Credit notes are raised for discount. Can you raise a credit note for discount and can you avail credit? If I am the commissioner, expect a notice. Expect a notice. I am not going to allow you credit of tax paid through credit note in respect of discount. If it is discount, you have to fulfill the conditions laid down under 15 subsection 3. If you don't fulfill the conditions laid down under 15 subsection 3, there is no question of any credit note that I will allow. So please be careful. Not every discount should be possible to be availed through a credit note. Not possible. Not possible. Credit note is only under 4 circumstances. Please be very clear. Not under any other circumstance. 2, incentives. Companies issue credit notes for incentives. Take for example, Abhinya madam was telling me, Fenner is there in Madurai or even TVS is there in Madurai. Okay. Fenner will issue credit note. Why will Fenner issue credit note? Fenner will issue credit note to his dealers located across India to transfer incentives. The first question that I am asking you is, when you transfer incentive through a credit note, is it a service or is it a supply of goods? Mentally be clear. Abhinaya madam, who is sitting there, is going to turn around and tell me, no, this is not goods, this is not service, this is incentive, this is credit note. Next question, what is the rate of tax applicable? Is it the rate applicable to Fenner belts? Or is it the rate applicable to any other product that is manufactured by Fenner? Or is it a service liable to tax at 18%? Or is it taxable under entry 452 schedule 3 at a residual rate of 18% in respect of goods? Or it will be taxable under 9997 relating to services under the residual entry at the rate of 18%. What is this incentive? Is this incentive disguised as discount? Is this incentive a price protection mechanism? Is this a price protection mechanism? Is it a price difference mechanism? Is Fenner forcing Abhinaya madam to sell this product at 96 rupees, telling that the day you hit your 100, let's say 100 lakhs, I will give you a credit note for 3%. So what is that? Is it incentive? Is it price protection? Is it discount? If it is discount, is it quantity discount, value discount, seasonal discount, product discount, rate discount, prompt payment discount, area discount, market penetration discount, dealer discount, new product discount? What is this? What is this incentive? Please be extremely careful when you are going to account for credit notes. You have to figure out whether it is discount, incentive, rate difference, product penetration, deep discounts, price protection. If it is price protection, I will tax you at the rate applicable to the product. If it is discount which is agreed to in terms of section 15 subsection 3, that means you have an agreement, the supplier and the recipient are aware that this discount is to be passed on, then it will be a reduction in turnover. Second, go back to your books of account. Go back to your P&L account and balance sheet. How are you accounting this discount? What is the entry that you are passing in the books of account? Let's get back to raw basics. Are you saying that this discount is going to be a reduction in turnovers that is declared in the financial statements? Then you need to figure out whether it is in the nature of a discount. Is it in the nature of an incentive and therefore you debit to P&L account? A debit to P&L account will necessarily not be a discount. Please be careful. It could be taxable in the recipient's hands. Be extremely careful. I don't want tax in Fenner. I will go back to the recipient and subject that man to tax. I will subject that man to tax. Here, anywhere no credit, there I will levy tax. I will get two taxes. Be extremely careful when you are going to deal with transactions relating to discount, incentive, price difference, price variations and price protection. A price protection is different from price variation. TVS Motors of Madurai will come up with a scheme. They will say every dealer who is situated in Madurai, if he sells one TVS motorcycle, the dealer will sell at 55,000 rupees. TVS will reimburse 5,000 rupees, let us say. What is this 5,000? Is this reduction in price? Is it price protection? Is it discount? Or is it price variation that you are giving him? If it is going to be a discount, no difficulty, reduce your turnover. But look at the entry in your profit and loss account and balance sheet. Please look at the entry in your P&L account and balance sheet. The entry in your P&L account and balance sheet must also so reflect to reduce turnovers, and it cannot be a debit to P&L account. So consider this one transaction of credit note. This is one of the issues. Consider a second issue. I have seen entities passing entries in their books of accounts. Entities passing. Madam, can I go to my? Yes, now I can see. I hope you can hear me. Correct? Can someone tell me?
Audible, sir, please go ahead. Yes, sir. Audible, sir, please go ahead.
Whenever you can't hear me, please tell me. Till then, I will continue.
Yeah, sure.
Second example of gift, sample, business promotion, or whatever you want to call it as. All these are debits to P&L account. What is a gift? Let us say I gift one watch to the chairperson of Madurai branch. A gift is a transaction where there is no reciprocation from the other end, which means it is unilateral in nature. Unilateral. Unilateral. We take it. What Abhinaya madam does with it or Manimala madam does with it is their problem. They may even leave it in the institute chambers and go off. But it is unilateral. Now, whether a transaction is a gift or whether a transaction is a sample or whether a transaction is a business promotion, please consider this transaction. Consider, for example, TVS, which is also located in Madurai. For every motorcycle, TVS may give you a toolkit. They may give you a toolkit. They may give you an additional seat cover. They will give you an extra mirror. So what is this? Is it gift? Is it sample? Is it business promotion? Is it a free transaction? Each of these have got different connotations. Please be careful. If it is going to be sample or gift, you will have to reverse input tax credit under 17 subsection 5. If it is going to be a business promotion, then it is in the course or furtherance of business, you can avail input tax credit. Consider a small shopping center in Madurai or Chennai or Coimbatore or wherever. Consider a shopping center. When one of you go to the shopping center and enter, let us say, a shop, he will give you a glass of juice and he will tell you, madam, you please try this, sir, you please try this juice, sir, it is new, sir, it is guava juice, sir, it is pomegranate juice. You will be made to drink the juice. There are people who don't drink, that's another matter. When you drink the juice, is it sample? Is it business promotion? Please be careful. Is it sample? Is it business promotion? Is it free issue? If you say it is sample or if it is free issue, reverse corresponding input tax credit. If you say it is entertainment or business promotion, corresponding input tax credit is available under the goods and service tax law. So you decide what is the entry that you are going to pass in your books of account. Consider a third transaction. Let us say you buy Times of India newspaper in Madurai. Along with Times of India, the man will give you a 5 ml shampoo sachet. He will give you a shampoo sachet, comes along with the newspaper. What is that? Is it business promotion? Is it advertisement? Is it gift? Is it sample? If it is sold in a shopping mall, if it is issued in a shopping mall, will it become business promotion? If it is issued to your house along with a Times of India newspaper, will it become a gift or will it become a sample or will it become a business promotion? It is what you decide. And what is a factual transaction is what you will need to consider. Consider case number 3. Case number 3, where this audit is going to take you and where this 9C is going to take you. Very recently, as recently as about 4-5 months back, I was trying to conduct an audit in respect of a jewelry store. Please don't take it otherwise. It is a live case example that I'm telling you. It need not be jewelry. It can be any other product, right? But I was doing the audit of a jeweler. For the last 3 years, the man has been claiming input tax credit in respect of insurance taken on stock. If I ask every one of you here whether input tax credit on insurance is available in respect of closing stock, you will say, yes, sir. What are you talking, sir? This is in the course or furtherance of business. Without taking insurance, you can't run a shop. Jewelry, if it is stolen, I will lose, I will collapse, my business will fall down, I will never be able to recover in my lifetime. All this you will tell me. Correct? So what I did, I told him, give me your insurance policy for the last 3 years. For the last 3 years, consistently he has taken insurance for 5 crores of closing stock. This includes bullion, specie, gold, silver, studded jewelry, ornamental jewelry, etc. 5 crores. That is the value for which he is insured. But his closing stock in P&L account is 27 lakhs. You think that man is a fool? You think closing stock in P&L account can be 27 lakhs? But he is consistently taking an insurance for 5 crores. What is wrong with us? Or what is wrong with that man? Is something wrong? His average stock is 27 lakhs, but insurance policy is running for 5 crores. So every P&L account, I took 31,317, 18, 19, 20, and I told him, boss, let me see the closing stock. He says, sir, my closing stock is between 20 to 30 lakhs. So I asked him, why did you take insurance for 5 crores? He says, no, sir, for that one transaction, which may happen sometime during the year when I may die. I said, all right, give me one peak transaction in the last 4 years that you are talking, where your stock has hit 5 crores. Physically, it is there. In the books, it is not there. This is the problem. So you decide whether you want to conduct an audit, whether you want to check insurance policy, whether you want to go by the document in your hand, whether you want to allow input tax credit, whether you want to caution your client that these insurance claims are incorrect, whether you want to tell him that, listen, someday you will be prosecuted for this. Please be careful when you are dealing with transactions. Earlier, credits were not available in respect of these transactions. He could have taken and escaped. Now, credit is available. The assessing officer sitting there is not a fool. The assessing officer sitting there is also endowed with some amount of common sense to ask for these documents and see. Now, this is the second channel. Consider the fourth one. I always tell young child accountants, if you don't know the product, don't attempt classification. Don't attempt classification. If you know the product, then I want you to attempt classification. Now, what is knowing the product? Knowing the product. Knowing the product means you should understand what that product is. Let me give you an example. All of us know pomegranate. All of us know pomegranate, correct? Pomegranate in Tamil we call it as Madhuvampara, right? Pomegranate. Now, what is this pomegranate? If I were to ask the chairperson, Abhinaya madam, she will tell you, Yana sir, what is wrong with you? This is a fruit. All right, this is a fruit. So if it is a fresh fruit, it is exempt under GST law. Now consider this case where Manimagala madam runs a business of pomegranate. She sells pomegranate fruit. She does decortication of this pomegranate. That means she uses the pomegranate, actually the red stuff inside, bottles it and sells it. 3, she bottles this pomegranate, uses preservatives, makes it ready to eat, or gives it a shelf life of 1 month. Subsequently, she sells. Now, whether these are ready to serve foods, whether these are fruits, whether these are exempt under 2901 is a call that you have to take. If you know the product, decide. If you don't know the product, be careful. You should know it. Only then you should decide. Consider a third case. Consider a third case. Wasteland. What is wasteland? Is wasteland a chemical? Is wasteland a petroleum jelly? Is wasteland general normal goods that are available? Is wasteland a toiletry article? Is wasteland a medicine? What is this? If wasteland is sold in provision store, can you say it is a grocery item? If it is sold in medical store, can you say it is medicine? If it is sold in an automobile shop, can you say that it is petroleum jelly? Or if it is sold by chemist, can you say it is a chemical? So what is this product? You have to know. If you don't know, don't attempt classification. Please be very, very careful. To my mind, the Supreme Court has said Vaseline to be a petroleum jelly, and it is not a chemical or medicinal product. Consider one other product before I move on to the topic of discussion. One, consider bearings. What is this bearing? This bearing is a part which, when fitted into a product, makes it move. For example, you have bearing in your mixie. When you look at a kitchen mixie, there is a bearing. You go and give it for repair, it's a bearing paid to madam, motor change the bearing, it will run. The fan in your house has got a bearing. The vehicle, the two-wheeler that you use has got a wheel bearing, right? You have a bearing in an automobile. You have a bearing in a fan. You have a bearing in a bicycle. You have a bearing in a mixie. You have a bearing in an electric fan that runs, ceiling fan that runs. What is this? Is this electrical goods? is this automotive product? If it becomes sold to a bicycle manufacturer, will it become exempt? How do you classify these products? Products are classified based on Rule 1 of Customs Regulation. A product is a product. A bearing manufacturer will sell it as a bearing. You can't take a call that if he sells it to Ashok Leyland, it will become automobile. If he sells it to Usha Electricals, it will become, for example, an electrical goods. If he sells it to Atlas Cycles, it will become sales to bicycles, bicycle manufacturer. No, a product is a product, and that is how you will have to handle this. Now, let me now quickly go back to the slides that we are having here. Now, I will start because this, sorry, no, sorry, 1 second, I'm just moving it to one side. Yes. Now, key features of an annual return. You can keep going on and on, but this GST will never ending. For those of you who have dealt with the 9 and 9C, I don't know what kind of reconciliations you did, but all I can tell you is if you did not reconcile your GSTR 1 with 2A, 2A with 3B, 1, 2A and 3B with financials, 1, 2A, 3B and financials with your books of account, 1, 2A, 3B financials and your books with the portal, I think life is not going to be easy. It is not going to be easy. You will have to reconcile each with the other. You will have to reconcile each with the other. Before even you open your 9, you do an Excel sheet reconciliation, then come back to 9C. Now consider these problems. Consider this problem. A transaction which happened in July or August 2017 in respect of an inward supply is purchase in respect of an inward supply where you are not availed input tax credit, but you availed this input tax credit in 2018-19 because the circular was issued saying if you missed out something for 17-18, please claim it in 18-19. You missed out in 18-19, claim it in 19-20. So if you are going to do a GSTR 9 for 2017-18 and 9-month financial year, the option is to only reconcile for the 21-month period. If you have not done the reconciliation for 21-month period, I am afraid your 9 and 9C may be incorrect. May be incorrect. I am not saying it will be incorrect. It may be incorrect. So please be careful when you are going to reconcile your 9 with 9C. Otherwise, life is not going to work. Now look at the first bullet point that you have on the screen. Notification number 47/2019 came to be issued. What is this notification 47/2019? This notification 47/2019 said that such of those registered persons whose turnover does not exceed 2 crores, whose turnover does not exceed 2 crores, you have an option to file an annual return. An option. You may file, you may not file. Suppose you have a dealer in Madurai, let us say a bakery, which is registered person, and his turnover is 1.7 crores. You need not file an annual return. So the law gave you an option. The law gave you an option. So when you read that notification 47/2019, it says such of those persons whose aggregate turnovers are less than or equal to 2 crores who have not filed annual return under section 44 before the due date. Please look at the provision. Then the proviso says the return is deemed to have been filed on the due date. Please read the proviso to 47/2019. Even if you have not filed the annual return in GSTR 9, it is deemed to have been filed on the due date. Deemed to have been filed on the due date. So please be careful. Simply because you have exercised that option does not mean that you have not filed. You are deemed to have been filed. That means I total up all the 9 3Bs for financial year 2017-18. That will be your GSTR 9. Then I will match that with 1, 2A, 3B financials, audit report in 9C, and the portal. If it doesn't match, you are a fit case for section 74. What is section 74? there is a willful or malified intent to defraud government revenue. So I will give you a notice. Please be extremely careful. So don't exercise that option. I want each of you to file the return. What did this notification 47 by 2019 say? The notification said total of turnovers in the return will be adopted. That means total of the turnover in the returns. I will total up 9 months 3B. I will take that for the purpose of filing. Because the provision says it is deemed to have been filed on the due date. On the due date. February 7th was the due date for 2017-18. That day, you are deemed to have filed your Form 9, irrespective of whether you have filed it or not. So there is a tacit acceptance that there are no changes to your 3B. If you don't file, you are telling the government there are no changes. My 3B is my 9. My 3B total is my financial statements. My financial statements is going to be in my audit report. Unfortunately, it could be wrong, right? We may have issued e-bills. We may have issued e-bills. Those days, the old e-bill under the old law was continued to be relevant. So issues relating to e-bill may crop up. Reconciliation between 1, 2A, 3B financials portal and books of account may arise. Please be careful that if you don't file, these issues will come. The provision, because it says that if you don't file, you are deemed to have been filed by fiction. It is understood that you have filed. Therefore, it is possible that at the back end, the government may have generated a Form 9 and when he issues you notice under Section 65 for the purpose of audit or summary assessment under Section 64, he will give you that Form 9 and he will tell you, now come on, you reconcile because you did not file Form 9. Go ahead and file. Such of those dealers who did not file Form 9, mentally get clear that you are a fit case for audit under Section 65. You will be picked up for scrutiny under 65 or special audit under Section 66. Alternatively, you could also be a fit case for initiation of such under Section 67. So, or worst of all, you can be issued a notice under Section 61 for the purpose of scrutiny. A circular came to be issued. A circular came to be issued, and I think if my memory is right, that circular number is 124 of 2019. 124 of 2019. It says, at any point in time, if you are not able to reconcile your 1, 2A, 3B, etc., and you want to effect a payment, you can effect the payment through a DRC 03. All the GST DRC 03 payments under Section 73 will be cash payments with no adjustments for credit. So aggregate turnover during financial year 18-19 is more than 2 crore but up to 5 crore. You are required to file your annual return before 36/2020. Please be careful. 18-19 annual return is 36/2020. 9 is 2018-19. Form 9 is 2020, but your 9C is September. It has been it has been postponed to September. Please be very careful about this minor provision. Reconciliation. A registered person whose aggregate turnover exceeds 2 crores, but it does not exceed 5 crores, are not required to get their books of account audited for 18-19. So up to 5 crores, there is no requirement to file 9C. Mentally be careful that whatever I said for GST or 9, when government makes it optional, mentally get ready for scrutiny. Up to 5 crores, no requirement to file GST or 9C. It is an option. So once you don't get your books of account audited, I will give you a notice saying there is a willful and malified intent that you have not maintained the books of account in a correct and verifiable manner. Therefore, I will initiate such proceedings under Section 67. Perfectly possible. So mentally get ready for all inspection, scrutiny, search, seizure, all of these provisions. Not necessary. You may be a bona fide dealer, in which case life will move on. There is absolutely no difficulty at all. Now, let us go to some of the issues that may arise in GSTR 9.
Sir, sorry for the interruption, sir. Sorry for the
Yeah.
interruption. Sir, you can go to the full screen mode by pressing F5, sir. I think the font will be more visible.
What should I do, madam? Abhilya, madam? Can you hear me? Am I okay? Can I continue? Have I lost the connection? Can anyone tell me whether I'm okay?
Sir, you may go ahead. She got disconnected due to power cut.
Okay, okay. I can go ahead, right? Okay.
Yeah.
Thank you. Now,
You can press F5
yes.
so that you get the full screen.
Sorry, sir, my in our area power cut. That's why connection has been
Okay.
lost.
I can continue, right?
Yes,
Yes.
sir.
Okay.
Yes, sir.
Now look at the outward supplies. I've taken some examples of how outward supplies is going to affect your GSTR9. Look at bullet point 1. I have said in bullet point 1 that the outward supplies, sorry, I'm so sorry, I'm just trying to move this away from here so that the screen is visible. Yes, the outward supplies for the tax period December 2017. Please be careful. Follow my example very carefully. Sales or outward supply is December 2017. It is disclosed in 3B of 1819. அப்படின்னா நான் என்ன பண்ணினேன்னா, I did not disclose this turnover in 3B for the month of December 2017. நான் பண்ணல. I did not do. I disclosed this in 1819 financial year. Why did I do? ஏன் பண்ணினேன்? Law told me it is all right. You include this turnover in 1819. If you have not reflected this in 1718 turnover, no difficulty. So last சொல்லிடுச்சு. So now only 1819 turnover declare பண்ணிட்டேன். So when the turnover relating to 1718 is disclosed in 1819, then it must be disclosed in GSTR 9 of 1718. எங்க பண்ணலாம் பார்க்கலாம். You have to disclose it in 1718 GSTR 9. Be careful. 9 is an annual return. You cannot skip a single transaction of 1718 in 1718 annual return. ಒಂದೇ ಆಗೋದು. Turnover might have come in 3B of some other month, but disclosure you will have to do here. There is really no option at all. Now, if you look at the heading of table 4 in GSTR 9, look at the heading very, very carefully in table 4 of GSTR 9. It will tell you details of advances, inward and outward supplies made during the year, made during the financial year. The moment he uses the word made during the financial year, you have no option but to disclose it in GSTR 9. Any transaction relating to 1718 must be reflected in the annual return in 1718. If you don't disclose, then you could get into problems under section 74. Willfully not disclosed will fall under section 74. Now, in the above situation, GSTR 9 for the year 1819, you should disclose this December 17 turnover. You should exclude this turnover. Sorry. In the turnover 1819 3B la irukku, 1819 3B la irukku, but it relates to December 2017, that is 1718. So 1718 turnover is included in 1819 3B. Therefore, exclude in GSTR 9 of 1819, include in GSTR 9 of 1718. Now, this form number 9 provides for that column. If you go to part 5, table 10 to table 12, it permits this adjustment for both the years in 1718 and 1819. But 1920, This table is not there. I am sure they will amend that. So 17, 18, 18, 19, GSTR 9 gives you this table to make this adjustments. Therefore, in order to arrive at turnover for 18, 19, Form 9 must contain a separate adjustment of our outward supply spend. Please be very careful. Now look at this next example that we are talking of here. The next example relates to inward supplies. The first one was outward supplies. The second one that I am talking of is inward supplies. Inward supply is purchases. Now if you look at the left hand side column, which is in gray color, ITC availment other than RCM. I have not taken RCM because RCM is a separate issue by itself. 1 hour will not be enough. Now I am taking an issue here where input tax credit is availed relating to July 17 to March 18, that is financial year 17-18. It is claimed in 18-19 financial year. Yeah, now return a file panla 17-18 la. When invoice what to put 17-18 la, because you could not revise your 3B. The circular said reflect it in 18-19, take the credit. But how do you disclose that in 9? So you might have disclosed in table number 13 of GSTR 9 for 17-18. Whether you have disclosed it or not disclosed it, you can't avail it in 18-19. You can't, because the inward supply relates to 17-18. You have to remove it from 18-19. In 19-20, this issue does not arise at all. So where do you reflect this? You will reflect this in table number 6A. First, what is table number 6A of GSTR 9? Table number 6 of GSTR 9 tells you details of input tax credit availed during the financial year. Now, availed during the financial year means sum total of everything you will have to consider. Sum total of everything for 18-19, whether it is auto-populate, I think now they are allowing you to key in, and then it forms part of subsequent disclosure. 6C, 6D, etc., 6B, 6C, 6D, etc. in GSTR 9. Then in table number 8B of GSTR 9 for 18-19, you have to disclose this and delete this from that turnover. In table number 12 of 9C, be careful, in 9 you have to delete, in 9C you have to disclose. If already claimed in the books of 2017, but claimed in 18, books of account entry 17-18 la. Return la 18-19 la poirkom. Adukku in the treatment kudukonom. But if you are still missed out, give a separate note in the annexure, a separate note as an annexure to 9-9C to say that there is a discrepancy. Now, this entire adjustment is assumed that credits are eligible to be claimed. That's why you will find a blue there at the right hand side corner at the bottom of your screen, which says assuming credits pass the eligibility test. You must be eligible. Please be careful. Under goods and service tax law, the word eligible is differently understood from the word avail. Avail is different from eligible, ineligible, reverse, not claimed, claimed, available, not available, partially available, all have different meanings. Please be careful. All these words are used in different parts of the statute, different sections of the statute. Be it that or be it the rules. He will tell you input tax credit availed, input tax credit eligible, input tax credit ineligible, input tax reversed, input tax not available, input tax availed but ineligible, partial rebating. All of these are completely different under law. So please be careful. That was in respect of input tax credit. Now here is a different example. Please go to the left hand side corner. Input tax credit availed pertaining to July 17 to March 18, claimed during the tax period 19-20. Please be careful. Time limit aayithu. Government enna sonna 17-18 la swami nee claim panla, paravalla 18-19 la claim panna, full 12 மாசம் கொடுத்துட்டா. April 20, 2019 முன்னாடி கூட claim பண்ணிட்டான். Now what we did not claim. நம்ம அதையும் விட்டுட்டோம். 18-19 விட்டுட்டோம். 19-20 la போய் claim பண்ணி வச்சோம். Now what to do? Treatment in 17-18. First of all, this input tax credit is not available. Please be careful. For you to be eligible to claim, avail is later. Please be careful. To claim input tax credit, it must be reflected in your return somewhere. It must be reflected. Second, in order to avail, it must satisfy the conditions laid down. So first is claim, next is avail. To claim, it must be in the return. To avail, it must pass the test. Now in the case of you claimed, but you cannot avail. So time pointed. So this is ineligible credit. Two scenarios are possible. You are reversing 1819 3B or you are reversing 1920. No impact needs to be given in GSTR 990 of 1890 because it relates to 1718. Now we look at the third one. Next example relating to inward supplies again. Input tax credit pertaining to 1718, July 17 to March 18, availed during 1890, but reversed later. You realized your mistake, so you reversed it. Now what you will have to do, you will have to give effect in table 6A, as we did in the first case, and table 8B of GSTR 9, and table number 12A of GSTR 9C. Please go there. Table number 8B will tell you, if it is in respect of the relevant previous year, you delete that, automatically the credit gets adjusted. Now table number 14, reversal in 1920, to be shown as unreconciled difference because currently there is no table. I am confident that the government will revise 990 of 2019-20 shortly. They will revise it. You will get a revised form. You will be able to reflect this. Now we go to the next one. Inward supplies relating to inward supplies relating to 2017-18, inward supplies relating to 2017-18, reversed during 18-19. If it is reversed during 2018 and 19, then we have to reverse it in, where is it reversed? It is reversed in 3B. Then eligible input tax credit should be disclosed in table 4A of 3B, table 6A of 9. You have to disclose it in these two. Then you will have to reflect it as ineligible credits. If it is not ineligible, if it is ineligible, you need not disclose. If it is reversed, the amount should be reflected in table 4D of form GSTR 3B. Beautifully devised form. It is self-explanatory. Please look at this. The same treatment, change the assessment year and the same issue will be applicable. So if I given you here 1718, change it to 1819. Wherever it's 1819, make it 1920. Come back to the right hand side corner, change it by 1 year, you will have the solution of what you should do in case of these discrepancies. Now after all this, we still have some teething problems. What are the teething problems in respect of GSTR 9? In part 5, table 12 and 13 of GSTR 9, it provides for adjustment. What is this adjustments in part 5 of table 12? It says supplies stock tax declared through amendments or adjustments, net of debit notes, net of credit notes. Please be very careful. Section 36 deals with debit and credit notes. Only 4 conditions. There is no 5th condition for debit and credit note. Therefore, when you make this adjustment here, be very conscious as a child accountant. You are putting your client in deep trouble. Client be careful when you are dealing with debit and credit note in table 12, table 10 to table 13. Similarly, in table number 8 for 2A reconciliation, a separate table should be made. Separate table should be adjusted. It is very simple. I don't think you have a problem at all. So I've taken some examples of 9C and initially I gave you the examples of 9 and told you how you need to go about it. The first question that you have to answer in respect of 9C is whether it is an audit report or a certificate. Now I'm quite clear that under 44AB, it is a certificate. Although you call it as an audit, the institute has clarified that it is a certificate that you issue. Similarly here, if you go to the technical guide, the technical guide has made it clear that what we issue is a certificate. So similarly, if you go to 9C, 9C will also tell you that it is a certificate. Therefore, we don't issue an audit report although the relevant provision calls it an audit report. So this is a certification exercise that is being carried out. So we call it the reconciliation exercise, which is a part of the certification, although the government has loosely said or used the word that it is an audit. It says, I have conducted the audit, etc., all the information, all purposes may believe in necessary for audit, but it is a certificate. Council has made it clear that it is a certificate that you issue. Now, when you do an audit under the goods and service tax law, mentally be clear that there are the role of a chartered accountant. You will have to keep three things in mind. If you are keeping a document in your hand, then you should know the intent of that document. What is that document? Why is that document? When is that document? What for is that document? For example, purchase order. If you are looking at a purchase order, what is the intent of that purchase order? Does it specify some conditions? Does it bring in some contractual obligations? Does it tell you the time of supply? Does it tell you the place of supply? Does it tell you the mode of payment? Does it tell you how to determine the actual time of movement of goods or supply of service? Does it tell you? You will have to look at that document column wise, word wise, condition wise. Be very careful. That is your role. Second, the purpose for which it is going to be used. Purpose for which it is going to be used. For example, if the purchase order issued by, let us say, our Abhinaya Madam's company, Feller, if Feller issues a purchase order which says payment is required to be made after 300 days, this is the purchase order. Vendor will issue a purchase order to its vendor by saying, please supply me rubber. I will make payments after 300 days. That's the purchase order. You want to supply, you supply. Don't want to supply, don't supply. There's no difficulty. The others will supply for 300 days. So what is the purpose for which it is going to be used? Now, can you say you want to use this purchase order for the purpose of determining your 180-day limitation to reverse input tax credit under second proviso to section 16 subsection 2 clause C, which says that if the vendor is not paid within 180 days, then credit will not be available. Please look at the proviso. Please read it very carefully. Very, very carefully. Section 16 subsection 2 clause C second proviso says where a registered person fails to pay within 180 days. I don't have an obligation to pay within 180 days. Why will I pay within 180 days? Now, here is a case where Abhinaya Madam has issued a purchase order saying I will pay you only in 300 days. So, there is no obligation to pay in 180 days. Mentally get clear whether that proviso will apply or not. Whether it will apply or not. If my terms of supply are 300 days, where will 180 days come into picture? No question of reversal. I won't reverse. I will fight this case. I will fight this case. Government cannot control my payment terms, right? It is one of the conditions to ensure that you pay. There is no loss of revenue. It cannot be written down. There is no interest loss. Government has already got the money because the vendor has effected payment of tax, right? Therefore, mentally be careful how you are going to use the document, and whatever document you are going to use, how is a user going to look at this document? Because the same purchase order, the registered person is seeing it, vendor is seeing it, Madimagala Madam is looking at it, government is looking at it, court will also look at it. So who are the users of these documents? The users of these documents are multiple stakeholders. Therefore, these are basic things that are required to be analyzed when you sign a document. So when I'm giving you all of this, when you are going to effect a signature or place your signature on 9C, all these people are going to look at it. What is the intent of this 9C? To look at whether all the transactions are being captured correctly, completely as required under law. What is the purpose? The purpose is to ensure that you have declared all your turnovers and paid your taxes. Who are the users of this document? The user can be vendor, the user can be court, the user can be an IBC. IBC authority, or user can be company law, user can be income tax statute, or the user can be the GST department or your own registered taxable person. It plays a phenomenal role. Please be careful of how you are going to look at these transactions. Now, what is the importance of a certification or audit under the goods and service tax law? Can you rely on the audit of books of accounts performed under any other statute for the purpose of making observations, qualifications under the goods and service tax law? Now, assume a case where Mani Meghala Madam is conducting the audit or taking up an assignment for issue of a certificate in 9C for FINR. FINR statutory auditor will be Fraser and Ross. Fraser and Ross is going to make observations, qualifications, statements, disclosures, notes to account, emphasis note, qualification note, observation. He can do anything. Now, once he is going to do that, is it fair for Mani Meghala Madam to turn around and say, I am going to base my report based on the observation or qualification made by Fraser and Ross? Fraser and Ross has conducted an audit under a completely different statute. Whereas Mani Meghala Madam is conducting the audit of FINR, Madurai branch alone under the goods and service tax law. There is no guarantee that she will do the audit of a Delhi branch or a Thiruvananthapuram branch. So there is a possibility that she will not do. Then can she place reliance on Fraser and Ross? Let me give you an example. Fraser and Ross might have disclosed in the audit report of FINR Limited saying balances in the accounts of suppliers and vendors are pending reconciliation and confirmation. Now, what will she do? Should she say that inward supplies are not properly accounted? Can she say? Because Fraser and Ross has qualified that they are pending confirmation. Alternatively, what should she do? Should she take up 100% verification of inward supply for the fee that FINR will pay? It may not be worth it. So, 3, can she say all inward supplies exceeding 1 lakh I have verified? Alternatively, can she say all consumables in respect of which input tax credit has been availed has been checked in full? Can she say it? You have to be extremely careful of the samples that you are going to choose, and the qualification, disclosure, statement, observation or emphasis that has been laid by some other chartered accountant has to be borne in mind. Please be careful of how much reliance you can place upon. The example that I gave you, Fraser and Ross might have checked 25 inward supply invoices out of FINR's 5,000 invoices, whereas Mani Meghala Madam may be checking 1,000 invoices of inward supplies, whereas Fraser and Ross would have checked only 25. For him, materiality is enough, but for you, accuracy is important. So you will have to be careful of how you are going to treat an audit done by somebody else. It is a serious matter. Whether the reconciliations, observations, qualifications on the basis of audit not certified or attested by him. Please be careful. The audit under company law is carried out by Fraser and Ross. The audit in terms of 44A of the income tax law could be carried out by KPMG. The audit in respect of transfer pricing may have been done by Deloitte, but GST audit or certification is going to be done by Mani Meghala Madam. Look at the headache that you are going to have when you are going to place reliance on some other chartered accountant's work. Your job is to look at every single notes. Now, these are called connecting statements. They connect the financial statements, they connect the cash flow statement, they connect the books of accounts with the financial statements, they connect the accounting standards, guidance note, books of accounts with cash flow with financial statements. Every single statement that is there is going to be absolutely important for the purpose of looking at these transactions. So it is a matter of serious concern. Please be careful when you are going to do a reconciliation statement. Now look at the next issue. Role of a chartered accountant in certifying a reconciliation statement. last year, 2017-18, there was one registered person who came to me. He told me, sir, 2017-18, எனக்கு 44AB ஆடிட்டே பண்ணல சார். நான் ரிட்டர்னே ஃபைல் பண்ணல. ரிட்டர்ன் ஃபைல் பண்ணல. 44AB இன்கம் டேக்ஸ் ரிட்டர்ன் ஃபைல் பண்ணல because ஆடிட்டர் பண்ணல சார் எனக்கு. This is his statement. This is what he said. He is a partnership firm. 17-18 he is not filed his return. The time is barred. I think you have to file your return for 17-18 before 31-3-19. It was time barred. He did not file his income tax return. He came for GST audit. What will you do? He's telling sir, நீங்க 9C certify பண்ணி கொடுத்துருங்க சார் எனக்கு. What will you do? What should you qualify? Should you disclose? Should you emphasize? Should you prepare a note? Should you tell your customer or your client that listen, 44AB முடிச்சுன்னு வப்பா நான் GST audit பண்றேன். இல்ல ரெண்டுமே நானே பண்றேன்னு சொல்லணுமா? What is it that is required to be done? What is it that is required? It is absolutely important that as a chartered accountant, you be very, very careful. There are several apprehensions. Should you go beyond the GST requirement? Should you go beyond the GST? GST law says 9C is required. It never says 44AB is required. It's wherever it says that a place reliance or obtained information where audit is done by somebody else. Say it is not done. Continue with your GST. Your role is limited to reconciling values. Please be careful. This is the press release issued by CBIC. This is the press release. And press release says is limited to reconciling the values declared in annual return. Bold in the parmo values declared in annual return with audited annual returns. Sorry, annual accounts. Even audited illa. So even என்ன பண்றது நம்ம கிருஷ்ணராமன், when audit is not there, what would you do? Audited annual accounts இல்லைன்னாக்க disclose, continue with 9C. This is a press release. Press release is not binding. Press release is not persuasive. Press release is not emphatic. Press release is just a thought of CBIC. I don't think it is binding on any assessing officer. Please be very, very careful. There is no requirement to do anything. You just continue. 2 subsection 13. Give me 1 second. I'm so sorry. The window created some problem. Yeah.
It's okay, sir. It's okay.
Section 13. This is the first ever time that any statute has tried to define the single word called audit. It is not defined to my mind under income tax law. I stand corrected. The word audit is not defined under the Companies Act. The word audit is not defined under transfer pricing law. The word audit is not defined somewhere else. In the Goods and Service Tax law under the General Clauses Act, the Goods and Service Tax law has attempted to define the word audit. Now I have completely bruised and battered this word audit. Now look at what audit says. This section 2 subsection 13 says audit means. It doesn't say audit includes. Please be careful. It says audit means. It doesn't say audit means and includes. It doesn't say audit excludes. It says audit means. That means the man is very clear when he is defining the word audit. Audit under GST law means only this. Means what? Audit means an examination. What is examination? Examination of what? Records. Please be careful. Records, returns, other documents maintained or furnished. Other documents maintained or furnished. Please be careful. Book in the income tax law, in the 3CB, there is a class. Books of accounts maintained, books of accounts verified. Normally, I find child accountants doing a cut test. Simply because books of accounts are maintained, it need not be verified. It need not be disclosed. It is required under some other law. It is not required here. So please be careful when you are doing this. Because audit means an examination of record. We will see what record is. Returns. Return means 3B. 2A is not a return. 2A is not a return. Return means 3B because 89(5) was amended to include 3B. Versus State of Gujarat, somebody went to say that 3B is not a return. Now they have ratified that to say 3B is a return. 3B is a return. 2A is not a return. 1 is not a return. GSTR 1 and 2A are statements, but GSTR 3B is a return. GSTR 9 is a return, but 2A and 1 are not returns. They are statements. Please be careful. So audit means records, returns. You have to examine record. You have to examine return. The question is, you don't need to examine 2A and 1. Don't examine, no problem. If you are happy without examination of 2A and 1, when you want to conduct the certifying process, go ahead and do it. Law does not stop you. Audit means it is an examination. Be careful. This audit does not mean that it is an audit for a chartered accountant. This is an audit that one has to understand under Section 65. Under Section 65. You can have an extended understanding because you are certifying 9C to say 213 includes audit. Therefore, sorry. Section 35 says audit. Therefore, audit means you will have to derive this. Yes, this is an understanding of the chartered accountant. Does not matter. So it is records, returns, other documents maintained or furnished. Now, what is maintained or furnished by a taxable person? Simply because I maintain, I need not furnish. I need not furnish. What I have maintained, there is no requirement to furnish at all. For example, if I have a Kacha book which records all inward and outward couriers, it is a record maintained, it is a document maintained, it need not be furnished for audit because he will give you a GTA invoice. He will say, based on this invoice, I have claimed input tax credit. For example, in the earlier example that I gave you, an insurance invoice for 5 crores together with the insurance policy for 5 crores will tell you that input tax credit is available. So it is a document or a card for the purpose of availment of input tax credit. Now it is maintained. He need not give you stock register. If you don't want, don't ask him. If you want, you look at it. Choice is yours. So audit means examination of record, return, other documents maintained or furnished by a taxable person with a what? To verify the correctness of turnover. Please be careful. It is turnover declared. It is not aggregate turnover declared. It is turnover declared. Taxes paid. Please be careful. Taxes paid. Paid means physical payment. It doesn't talk set off. Refund claimed. Input tax credit availed. Please be careful. Here he is using the word availed. Now there is a difference between claim and availment. Claim and availment. You may claim 1 crore, but you can avail only 50 lakhs. Your claim is 1 crore, but your availment is only 50 lakhs. So please be careful. Claim and availment are different terms under the goods and service tax law, right? Section 2 subsection 13 also says audit means an assessment of the compliance of the taxable person. So the word audit is pretty exhaustive. It is pretty exhaustive. You have to be careful. So you have to determine while conducting an audit for the purpose of availment of input tax credit. Just an example, whether Abhinaya madam wants to check the GRNs, goods received note, or is she happy? Or is she happy by checking the inward supply invoices of FINR? Both these are not enough, but you want the gate pass maintained by the security at the FINR yard. What do you want to check? You check whatever you want. All of them become records. Records. The record may be available. How much time you want to spend is your choice. Please see how you are going to do this. Next. If a chartered accountant is not satisfied with the audit performed, what should you do? What should you do? Whether you should make observations, disclosures, statements, you have significant accounting policies, you have notes to accounts, you have emphasis note, you have an opinion, you have qualification, you have your or perhaps you may have a disclosure you may have a statement, there may be an opinion, there may simply be a line, call it by whatever name. A child accountant is not satisfied. What should you do? You should do one of the three. But if you qualify, you have to quantify. If you observe, you have to narrate. If you disclose, you have to state. If you state, then you have to specify. Please be careful. If there is an observation, there should be a narration. If there is a disclosure, there must be a statement. If there is a statement, then, then there must be a significant understanding of the transaction to be disclosed. There must be, if there is an opinion, both of you must come to a joint opinion. If there is a disclaimer, then you are putting your client in trouble. Or you can qualify, saying I have not done anything. Choice is yours. Whatever you want to do, you do. Next time, the client may not come, right? Now, books of accounts. When you do an audit or when you do a certification under 9C, please be careful. Books of accounts are generally prepared under the income tax law or under the Companies Act. Of course, you have associations, you have AOPs, you have societies, you have clubs, you have something else, whatever. Generally, they are prepared under the Income Tax Act 1961 or by following the Companies Act 2013. Under the income tax law, there are some entities who may perhaps follow the cash system, like chartered accountants. Most chartered accountants, lawyers, engineers, surveyors, architects, etc., follow the cash system of accounting. There are some who follow the accrual system of accounting. Books of accounts are generally prepared by companies on an accrual system of accounting. They are not permitted to follow the cash system of accounting. Let me make it absolutely clear here. Contractors cannot follow cash system of accounting. Contractors have to follow accrual system of accounting because your works contract is a continuous supply of service under 2 subsection 33. If it is a continuous supply of service, there is no cash system. It has to be mercantile or accrual system. Therefore, please be careful when framing an opinion. Be careful. I called it opinion. While framing an opinion, observation, narration, statement, disclosure, call it by whatever, disclaimer, qualification, whatever. You have to be careful of the facts that the statements are prepared and returns are filed under some of these or both of these or one of these statutes. Please be very careful when you are going to disclose. Why it is important, I will come 1 or 2 minutes later. Now, what should this audit report contain? Now, I called it an audit report. You can call it certification or you can call it reconciliation statement, call it whatever. What should it contain? Generally, this certification under 9C is understood to be a compliance check. It's called a compliance check because if you go back to what we discussed, please look at the right hand side corner on your screen. Audit means an assessment of the compliance. It is an assessment of the compliance. Therefore, the certification process is an assessment of the compliance with the GST legislature. And the users of this report who can be public, they will be under the impression that this compliance is in with respect to all the laws. All the laws. The moment you file a 9(c), they will think that you have complied with Companies Act, Income Tax Act, Societies Act, AOP Act, all acts, which may not be the case. I gave you an example of a registered person who said 17-18 income tax audit not done. Sir, it is not done, but I want my 9C certified. I certified. And I reported saying audit under the Income Tax Act in terms of section 44 has not been conducted. No difficulty. Certify 9C and send it. What is the problem? There is no problem at all. There is absolutely no problem. Right? So please be careful of what it is asking. Now, you have to be very, very careful. For example, I've gone back to my earlier slide to figure out whether it is cash basis or whether it is accrual. Some of these associations, for example, Madurai Club, for example, just an example, can have a cash system of accounting for membership fee. They can have a cash system. Lions Club of Madurai, Rotary Club of Madurai, they may have a cash system of accounting for receipt of membership fees or subscription. All other entries, they may follow the accrual system. Perfectly possible, because this will become a significant accounting policy. It will become a policy. But GST law does not allow you to do that. He says receipt of money, raising of invoice, at the time when supply is complete, please pay your tax. Or everything else we will see later. So you have to be extremely careful when you deal with transactions like this. Next, what should this report contain? It can have, as I said, observations, disclosures, statements, etc. Let me give you an example of what it should mean, what it should say. Let us say our chairperson of Madurai branch, Abhinaya madam, is conducting an audit or certification process of a partnership firm, Let us say Madurai Engineering Works. She is conducting a reconciliation, she's preparing a certificate for Madurai Engineering Works, which is a partnership firm. What is she required to disclose? What is she required to disclose in 9C? Now I will give you an example of what she should disclose, what she should not disclose, what she cannot disclose. She may choose to keep quiet, that is her choice. But tomorrow if I catch her, she will run for cover. Now I will give you an example of what she has to do. Let us say Madurai Engineering Works, please be careful, Madurai Engineering Works claims, not avails. I am very careful. Claims input tax credit only on passing entry in the books of account. Please be careful what I am saying. Madurai Engineering Works is purchasing iron and steel. He is purchased iron and steel in the month of April 2020. But he has not yet claimed input tax credit. Forget availment. He has not claimed input tax credit. He will claim input tax credit only when he passes an entry in the books of account. He may pass an entry in the books of account only in October 2020. No difficulty. Law says you claim input tax credit whenever you want within the prescribed period 6 months after the end of the financial year. So April 2020 input tax credit, Abhinaya madam will tell me, sir, unga problem enna sir? Next month September varaikkum irukku. Yenni yen sir neenga indha mari tondra pandreen eppa venna claim பண்ணுவ. Okay madam, no problem, you claim whenever, but you disclose saying I will claim input tax credit only when I pass entry in the books of account. The moment you make this disclosure, I know you are not maintaining books of accounts under section 35 on a daily basis. You are not maintaining. You are a fit case for inspection. If I am the commissioner, I will estimate, I will survey, I will search, I will seize, I will issue a notice under 74, and I will create criminal implications under 132 for you. Next year, Abhinaya madam will become all right. She will be all right. So please be careful. So now, whether you want to disclose this or not is Abhinaya madam's choice. But she has observed this. She has observed because she is doing the audit. She has observed. April மாசம் ஏப்ரல்ல claim பண்ண மாட்டேங்க சார், நாங்க entry போட்டப்பதான் claim பண்ணுவோம் மேடம். 6 மாசம் கழிச்சு தான் claim பண்ணிருக்கோம். உங்களுக்கு கஷ்டம் என்னன்னா, நான் முதல்ல claim பண்ணா உங்களுக்கு ப்ராப்ளம், நான் லேட்டா claim பண்ணாலும் உங்களுக்கு ப்ராப்ளம், எப்ப இந்த ஆயிட்டு இருந்த ப்ராப்ளம் தான். This is what they will tell you. But the difficulty is whether she should observe, she should give an observation, or whether she should disclose. Both are different. An observation is different from a disclosure. Now what I gave an example is a disclosure. She has to disclose. Now what is an observation? Input tax credit is claimed by Madurai Engineering Works on effecting payment. First one was disclosure, was passing entry in the books. Next, Abhinaya madam will tell 180 days குள்ள கொடுத்திருக்கீங்களா சார், அப்பதான் உங்களுக்கு கிரெடிட் இல்ல ரிவர்ஸ் பண்ணிடுவேன், மேடம் உங்க தொந்தரவே வேணாம், நான் கிளைம் பண்ணிருக்கிறது வந்து எப்ப பேமெண்ட் பண்றேனோ அப்பதான் கிளைம் பண்ணுவேன். இதுக்கும் கஷ்டமா மேடம் உங்களுக்கு அப்படின்னா ஒண்ணுமே இல்ல சார்னாக்க then you observe. So this is an observation, that is a disclosure. Please be very careful. An observation can be different from a disclosure, can be different from a statement. What is a statement? A statement can be input tax credit is availed by Madurai Engineering Works based on 2A. சுவாமி என் புக்ஸுக்கே வராது, நீ புக்கே எழுத மாட்டேன், வருஷத்துக்கு ஒரு தடவை எழுதுவேன், அதுவும் நீங்களே ஆயிட்டும், நீங்களே எழுதி கொடுக்கணும், நீங்களே 44B, நீங்களே GST எல்லாம் நீங்க தான். Therefore you write the book, you conduct audit under 44AB, you do 9C, you do everything. Then whether you have to observe, disclose or state, please be extremely careful. The first example that I gave you is availment of input tax credit when you book the entry or pass the entry. The second one that I gave you was a disclosure, was an observation that input tax credit is availed on effecting payment. The third one is a statement saying input tax credit is availed based on 2A available on the portal. Therefore, it is clear you have not maintained books. Absolutely clear. So you decide whether it is a qualification, observation, disclosure, statement, mentioning, opinion, call it by whatever name, you should disclose. This is just one example that I gave you of how life works in a GST law. Be extremely careful of the language that you use in the report. Don't camouflage the report. Don't camouflage. I want you to state whatever you are saying. The report should be clear on facts. You should be very, very clear on facts. For example, if Fenner in Madurai has got buses, or TVS has got buses which transport employees from their place of residence to their office or factory, if they transport, whether input tax credit is allowed. Please think over it. What is happening? Abhinaya madam is conducting the certification of audit of Fenner India. Fenner has engaged 50 buses from whatever transported from whatever Sriram transports. These 50 buses bring employees from common points in Madurai to Fenner's factory in Madurai. Whether they are entitled to claim input tax credit, please be extremely careful. I will answer this only in the question answer time. So is this a disclosure? Is this a statement? Is this an observation? Is this a qualification? Please be careful. The auditor should consider and go by maximum knowledge he has of law. Maximum knowledge you have of law. Even I don't know so many provisions in law. Abhinaya madam may not know some of the provisions in law. Manimegala madam may not know few provisions in law. But what the client believes is not the law. Not the client, but what the client believes is not the law. Consider the same example of Fenner transporting employees from the employee's place of residence. For example, he will transport Abhinaya and Manimegala madam from their house to Fenner factory. No problem. He is hired 20 buses. Can you avail input tax credit or not? Abhinaya madam will answer after the end of my session, right? Now consider the second question. Now, first of all, Fenner is paying Srirama Transports. Input tax credit may have been availed by Fenner India. As if this is not enough, the client will slowly come and tell you, madam, நாங்க வந்து 500 ரூபாய் deduct பண்றோம் from an employee for this service. Fenner is not giving you free. Srirama Transport is making a payment. From the employee, he is collecting 500 rupees. Please be careful whether this 500 rupees is a supply of service by Fenner to the employee because he is deducting from salary. Please be careful. A deduction is different from reimbursement. A deduction is different from appropriation. You are appropriating or you are deducting. Please be careful. If Fenner gives you no choice, Abhinaya madam, நீங்க ஆட்டோல வாங்க, டாக்ஸில வாங்க, ட்ரெயின்ல வாங்க, ஏரோப்ளேன்ல வாங்க, 500 ரூபாய் புடிச்சிருவேன், One scooter, it doesn't matter. It is an appropriation. If you use the bus, I will deduct, then it is a deduction. For a deduction, you have to give permission. For an appropriation, there is no permission. Now, what is an appropriation? 12.5% provident fund is an appropriation from salary. The employee need not give permission. But the employee can give permission to say, I won't go to the canteen. Sir, you direct I am not the tiffin carrier cutting on the one, sir, on the canteen Sava. 1. 2. On the bus, sir, my scooter on the second. Now, is there a supply from FENAR, or in the first place, whether there is a deduction? Please be very, very careful. Whether there are 2 supplies, 3 supplies, or 4 supplies in this transaction. Be careful. Supply number 1 from Sri Rama Travels to FENAR. Supply number 2 from FENAR to Abhinaya Madam. Supply number 3, Abhinaya Madam to Sri Rama Travels. 4 on appropriation. How many supplies are there? Client may believe there is only 1. I am believing there are 4. I am believing there are 4. One may be taxable, the other may not be taxable. Please be very careful. The language that you employ, the business that you know, the knowledge that you have, what the client believes need not be the law. It need not be the law. Now, to give you another example, FENAR will give identity cards to Abhinaya Madam. It will give an identity card. It will give a swipe card. அது கொடுத்தவன என்ன பண்ணோம் அந்த கார்டு காட்டினதான் உள்ள போக முடியும் இல்லைன்னா விட மாட்டாங்க Abhinaya Madam தள்ள எடுத்து தொலைச்சிட்டா லாஸ்ட் அவன் என்ன பண்ணுவான் டக்குன்னு 500 ரூபாய் வாங்கிடுவான். Can you say, is there a supply of this identity card from FENAR to Abhinaya Madam? Can you say that there is a supply? Because she is paid 500 rupees to get this card. Be careful. The first one was free. When she went for employment, they gave her free. Computer தொலைஞ்சு போச்சுன்னா டிடக்ட் பண்ணிடுவான். மொபைல் போன் தொலைஞ்சு போச்சுன்னா டிடக்ட் பண்ணிடுவான். ஐடென்டிட்டி கார்டு தொலைஞ்சு போச்சுன்னா 100 ரூபாய் கொடுமாமா. So whether these are transactions relating to supply, you have to be extremely careful about the language employed in these reports. Therefore, the language of the report, there must be no conflict in understanding. Please be careful. Don't use the word appropriate for deduct. Don't use the word deduct when you are recovering. Don't use the word recover for recoupment, because usage of the wrong words will give you a conflict of opinion. Can you say it is deduction towards transport expenses? Deduction is when you have permission. When you don't have permission, it is appropriation. It is appropriation. So when you appropriate, there is a service. When you deduct, there is no service. Please be careful. Both are 2 different things under law. Second, when there is a conflict of opinion, consider the examples that I gave you earlier. Bearing I gave you. A bearing which is used in mixie, electric fan, bicycle, automobile part. What is the rate of tax that you will apply? If it is bicycle part, it is exempt. It is exempt. If you sell to electrical goods, Usha Electrical Industries, it is 18. If you sell it to Ashok Leyland or TVS, it will become 28. How are you going to frame your opinion? There is a conflict of opinion. It must be resolved. How will you resolve? If conflict continues, take a second opinion, take a third opinion. And if you are still not convinced, the basis of conflict must be disclosed in the report. Consider a second case. For example, if Manimala Madam is conducting an audit of More or Food World or Central Mall in Madurai, then if she comes across Wasteland, how is she going to classify this? Is it medicine? Is it pharmaceutical? Is it grocery? Is it chemical? Is it toiletry? Is it beauty cream? Is it oil? Is it petroleum jelly? She has to disclose. She has to disclose. When there is difficulty, Manimala Madam should disclose. If she doesn't disclose, then there is a conflict of opinion. The one in favor of revenue will prevail. So you will have to get the conflict clear. So similarly, even in the earlier examples that I gave you, whether it is sample, whether it is advertisement, whether it is gift, or whether it is business promotion, disclose in the report. Unilever has got a 3,000 crore budget for advertisement. He will give you shampoo free. You go and stand in front of a mall. He'll tell you, sir, the clinic shampoo on the sir, the pollen, sir, sir. I'm sorry, not well, it will become black. Yellow soldier. Now, whether it is business promotion, sample, gift, advertisement, what is it? You take your call, you report appropriately. Therefore, you should resolve the conflict in your report. Next, chartered accountants should not take shelter under management certificate. Management, don't take shelter. Now, I have seen chartered accountants taking shelter by saying the closing stock as on 31st of March has been considered as declared by the management and duly certified by them. Swami, nee enappa audit panniya tunitiya enaya panni insurance 5 கோடி வாங்கிருக்கா 20 லட்சம் தான் closing stock இருக்கு monthly trading account போடலையா shop visit போனியா shop visit போலியா 20 லட்சம் தான் closing stock இருக்கு but monthly sales 1 கோடி இருக்கு எப்படிப்பா பண்ணுனா 1 கோடி 20 லட்சத்தை வச்சிண்டு. These are questions that should come to your mind. If it doesn't come to your mind, then you cannot take shelter that he is given management certificate. But நம்ம பண்ணுவோம் previous year 6.25% இந்த வருஷம் 6.5 போடுங்க மேடம் பார்க்கலாம் எல்லாம் கரெக்டா வந்துரும் அப்படின்னு 6.25 and 6.5 போடுறதுக்கு நான் வேண்டியது இல்லை. somebody else will fortify that. வேற யாரோ போடுவா நான் போடணும்னா கரெக்டா போடணும். otherwise I'm not interested in fortifying 6.25 to 6.5. I am not interested in doing that kind of an audit. So be careful of what you have to disclose, observe, state, qualify, emphasize, provide, proceed, how you want to do. You have to be extremely careful when you have to do. Reporting is not possible to verify. I have seen chartered accountants making statements that considering the innumerable number of stock items that are kept in the inventory, it has not been possible for me to verify. நான் சொல்லுவேன் அபிநயா மேடம் நீங்க தான் வேணும் உங்க மாதிரி தான் வேணும் இந்த மாதிரி நீங்க குவாலிஃபை பண்ணா வாங்குவோம். You are a fit case for the purpose of issue of notice under 74. You are a perfectly fit case. You are a fit case. உங்களை ஃபர்ஸ்ட் உள்ள போறதுக்கு ரெடி ஆயிடுவானா not possible to verify. Now you are a fit case for search under section 67, special audit under section 66 and prosecution under 132 read with 74. எல்லாத்துக்கும் நீங்க fit case. இந்த மாதிரி not possible to verify னு disclose பண்ணணுமா? You think client will not know. மேடம் அது என்ன பண்றதா பண்ணுங்க மேடம் சைன் போட்டு கொடுங்க ஃபைல் பண்ணிடுங்க அவ்வளவுதான் அப்படிமா அவன் தெரியாது. 3 வருஷம் கழிச்சு ப்ராசிக்யூஷன் நோட்டீஸ் பண்ணாக்க அபிநயா மேடம் போடுறான் என்ன மேடம் என்ன பண்ணுங்க உள்ளே போட்டீங்க என்னம்மா. So please be very careful of what you are going to do. You have to be extremely careful when you are going to give a note. A requirement or compliance under GST law cannot be avoided on mere reason not followed by business. You have to say why that was not followed or why it is not possible to follow. Why it is not possible to follow. Let me give you an example. Same FENAR case, same Avinaya madam and many madam are auditors for FENAR. Now what will happen? I want to ask Abhinaya and many madam, what is the document that you will rely on for the purpose of availment of input tax credit? Whether you will rely on EU pass or whether you will rely on invoice, whether you will rely on the goods received note, whether you will receive on the register maintained at the stockyard by the security. Please be careful. Or whether you will rely upon the record maintained by the stores in SAP or Oracle, or whether you will rely upon the financial statement. What will you do? Ellathum difference irukum. Because when the goods have left Steel Authority of India, it will be 1.1 tons. When it reaches the stores, it will be 1.08 tons. When it comes to accounts, it will be 1.11 tons. Because the price could be different, quantity could be different, value could be different, discount could be different, entry in the books can be different, variant can be different, there can be normal loss, there can be abnormal loss, there can be a loss in transit, there can be a pilferage, there can be an entry error, there can be a keying error. Discount principles might not have been given effect to the stores but it will be given effect to by the finance. So you have to be careful of what you are going to look at for the purpose of conducting this audit. No chartered accountant can escape the responsibility of books of accounts. No chartered accountant. You have to report on books of accounts, but please don't report that every books of account maintained is verified. Please don't do that, because there are certain books which you need not verify. For example, share transfer register of Sender India. Why would you want to verify for GST audit? No requirement. Debenture bond register, not required to verify. Why would you want to verify? It is not required. But payment register, yes, it is required to be verified. Bank passbook, yes, it is required to be verified. Invoice supply register, yes, it is required to be verified. Therefore, please be careful. You cannot escape the verification of section 35, read with rule 56. You have to be extremely careful. You have to deep dive. You have to look at these transactions and reproduce that, state that in your audit report. Please be careful. When you are looking at outward supply invoices and when you are looking at inward supply invoices, you cannot blindly avail input tax credit. The invoice that you are holding in your hand, உங்க கையில இருக்கிற invoice, இந்த கையில வச்சு நீங்க check பண்ற invoice, it should satisfy all the 21 conditions that are maintained in rule, that are stated in rule 46. Please be careful. There are 21 conditions that are stated in rule 46. All those 21 conditions should be fulfilled for the purpose of availment of input tax credit. Let me give you one example. These large companies have got the habit of rounding off. For example, ஒரு சுத்து சுத்திடுவான் invoice-ல 100 numbers நக்க 97 அப்படின்னு கையால எழுதுவான். அவனே ரேட் சேஞ்ச் பண்ணுவான், அவனே அவுட்புட் டாக்ஸ் சேஞ்ச் பண்ணுவான், அவனே ஜிஎஸ்டி சேஞ்ச் பண்ணுவான், அவனே எல்லாத்தையும் சேஞ்ச் பண்ணி அவனே என்ட்ரி போடுவான் புக்ல. This is not your invoice, it is somebody else's invoice. வேற யாரோ கொடுத்திருக்கான், நீ இந்த மாதிரி இதுல ரவுண்ட் பண்ண முடியாது. You cannot deface an invoice. If you deface it, and if I am the commissioner, Abhinay madam, I will give you a notice denying input tax credit, saying that you have defaced the invoice, and therefore you are not entitled to the input tax credit on the ground that there is an intent to defraud government revenue. Okay, ரொம்ப careful இருக்கணும். Please be extremely careful. Next, when you are looking at these transactions for the purpose of audit, you want to go to materiality concept, like how Tracer and Ross example la சொன்னேன். All invoices exceeding rupees 1 lakh have been verified. Please see, whatever you want to do, but whatever you have done, you disclose. Whatever you have done, you disclose. If you have verified only 50 invoices, please state an approximate number of 50 invoices have been verified during the course of conduct of the audit. Sender may have 5,000 invoices. And போன உடனே கமிஷனர் கேட்டான், அம்மா 5000 இன்வாய்ஸுக்கு 50 தானா வெரிஃபை பண்ணிருக்கீங்க? சார் போறோம் சார், 50 வெரிஃபை பண்ணா போறோம் சார். இந்த 50 வெரிஃபை பண்ணா you get a clear idea about, have the courage of conviction to tell the government that this is how it will work. But don't say I have verified all the invoices. Then கேட்டா, அபிநயா மேடம் 5000 இன்வாய்ஸ் வெரிஃபை பண்ணிட்டா? இல்ல சார் 50 தான் பண்ணிருக்கேன். I verified all the invoices னு போட்டுருக்கேன். Sir, the standard of cut paste பண்ணுவோம் சார் நாங்க. Don't do all this. Be clear in what you are doing. Verification of the product. Please be careful. If you make one mistake in a product, you are finished. I want to tell Manimegla madam and Abhinaya madam and all others who are part of this lecture, go to Sony showroom in Madurai. Please go to Sony showroom. Go to Sony showroom. Ask them for binoculars. The latest binocular that has come from Sony is along with camera. What is the rate of tax? If it is camera, it is 28. Please be careful. If it is camera, it is 28. If it is binoculars, it is electronic goods under chapter 84. Therefore, it will be 18%. If you argue with me saying, sir, binocular ulla camera sir, therefore 28 sir abhinaka. Mobile phone ulla camera irukku, therefore pay 28. Why are you paying 18? Mobile phone உள்ளே இருக்கு, கம்ப்யூட்டர் உள்ளேயும் கேமரா தான் இருக்கு. It is there. So computer உள்ள கேமரா இருந்தா கம்ப்யூட்டர், Mobile phone ulla camera and the mobile phone, binocular ulla camera and the sir camera, sir. Again, sir camera item. How will it become camera? Be careful of what you are doing. Pen camera, can it become a camera or can it become a pen? Now, all this depends on how the product is sold. If it is sold as binoculars, it is binoculars with a camera, and therefore it is binoculars. If a computer is sold as a computer with a camera in it, it is a computer and not something else. If a CNC machine is sold simply because there is a computer in it, it will not become a computer. A CNC machine is a CNC machine with an inbuilt computer, as simple as that. So it's a binocular with an inbuilt computer. It is a pen with an inbuilt camera. Sorry, it is binocular with camera. It is a computer with an inbuilt camera. Be extremely careful when you do product classification and verification. Please be very, very careful. Maintain subsidiary books. There are many companies which maintain subsidiary books. You will have a general ledger, you will have an inward supply register, you will have a stores register, you will have a goods received register. Now in the book, எல்லாத்தையும் பார்த்தாங்க தலை கெட்டு போடும். ஒரு புக்கு ஒரு ஃபிகர் இருக்கும். எதனா எடுத்துக்கிறதுன்னு தெரியாது. கேபிஎம்ஜி வந்து 5வது ஃபிகர் எடுத்து நம்ம ஆடிட் பண்ணிட்டு போயிடுவான். எஸ்எப்ல இருந்து மெட்டீரியலிட்டி கான்செப்ட் வந்து கிருஷ்ணா ஓடியே போடுவான். நம்ம எங்க போகுது? We cannot go anywhere. You have to be extremely careful of the books of accounts that you are verifying or checking. Please also be clear of the advanced rulings that are maintained. Right? Next, you have the certification. Now, the certification part is very, very clear. The certification says the registered person has maintained records and documents. Please be careful. Every word that is in bold here, I will come back and explain to you its importance of how you will have to look at it. And the rules notification. Abhinay madam, please see what you are certifying. I report that the registered person has maintained records and documents as required by rules, notifications. எந்த ரூல், எந்த நோட்டிபிகேஷன்? சார் நீங்க என்ன சார் புதுசா கேட்கிற? 10,000 ரூபாய் ஃபீஸ்க்கு நான் இதெல்லாம் பார்த்துட்டு இருந்தா எந்த காலத்துல சார் நான் முடிக்கிறது? 2 ஆடிட் மேல முடியாததால 10,000 தான் ஃபீஸ். இதுக்கு மேல என்ன சார் ரூல், என்ன சார் நோட்டிபிகேஷன்? நான் சொல்லுவேன், ரூல் 56 பார்த்தவா, ரூல் 46 பார்த்தவா, ரூல் 35 பார்த்தவா, ரூல் 89 அப்ளை பண்ணுவா, rule 80 sub rule 3 did you apply those mechanics? Section 41 and 42 did you apply for partial rebating? Did you see the classification? Sir, இதெல்லாம் பார்க்கணும்னா 5 லட்சம் ஃபீஸ் சார். ஒத்தனை கொடுக்க மாட்டாங்க. என்ன சார் போடு? Don't take the audit. That's all I will tell you. But if you do, this is what you are certifying. Please be careful. Even the income tax law does not have this stringent note. Please be careful. In the operative part of the report, it doesn't have rules notifications made issued thereunder, and he has not maintained the following accounts. Have you had the courage of conviction to say he has not maintained stock register? தைரியம் இருக்கா உங்களுக்கு சொல்றதுக்கு? சொன்னாக்க நான் கமிஷனரா இருந்தா நான் கூப்பிட்டு அபிநயா மேடம் வாங்கோ, உங்களாட்டம் தான் வேணும் எனக்கு எல்லாரும், இந்த மாதிரி இன்னொரு 4 ஃபைல் கொண்டு வாங்க, கிளீனா ஒரு எஸ்டிமேஷன் போட்டு ஆர்டர் கையில கொடுத்து தேங்க்யூ மேடம், அடுத்த வருஷமா நீங்களே வாங்குவோம். You only come. I will do an audit for you. So maintain the following accounts, not maintain the following accounts. And the income tax law, our auditor சொல்றாரு, considering the number of items, this is a retail store, the SEC has not maintained stock records because direct control is exercised by the management and stock is physically obtained on 31/3/2020 அப்படின்னு போடுவாரு. இங்க போட முடியாது. இங்க போட்டாக்க எஸ்டிமேஷன் கேஸ், you will go after best judgment assessment under section 64. So parking law, எப்படி போடணும்? Be careful. Then you decide how you want to give this note. I have seen chartered accountants, what they have done in 2017-18, they have struck off everything and said they have maintained everything. நான் கேட்பேன், ஸ்டாக் ரிஜிஸ்டர் டே டு டே ஸ்டாக் ரிஜிஸ்டர் கொண்டு வாங்கன்னு, மேலும் கீழும் பார்த்துட்டு இருப்பான். அவ்வளவு ஆடு இருந்த கள்ள மாதிரி ஒண்ணுமே கிடைக்காது, அவன் மெயின்டைன் பண்ணிருக்க மாட்டான். Be careful. Then I will go after you and I will tell you, how did you certify this? How did you certify this? Be extremely careful when you are going to do these certifications. Next, what is a record? A record is a source from which financial statements are drawn up. An invoice, is it a record or is it a document? An invoice is an evidence supporting a transaction, therefore it will become a document. A record is a source from which financial statements are drawn. Therefore, your inward supply register, outward supply register, general ledger, bank book, cash book, journal register are all records. Your 1 and 2A are records. They are not documents. They are not evidences supporting documents, right? Supporting transactions. Therefore, an inward supply invoice, debit note, credit note, purchase order, bank statement, contracts, agreements, e-way bills, gate pass, DRNs, they are all documents. So you are certifying in the previous statement saying the assessee has maintained records and documents. The moment you certify, I will ask you, Madam Goods Receipt Note Kudungo. Sir, அப்படின்னா என்ன சார்? வாங்க மேடம், உங்களாட்டமா தான் வேணும். நீங்க அங்க சைன் போட்டுட்டேன், எப்படி போட்டேன்னு தெரியல, உக்காந்துங்க அப்படின்னு சொல்லுவாங்க. So be extremely careful of what you are signing. Be very, very careful. But in respect of issues, the documents can be goods dispatch, it can be e-sugam, it can be delivery challan, it can be packing slip, it can be container note, it can be GTA agreement, it can be a shipment bill, it can be a bill of lading, it can be a dockyard's warrant, etc. It can be anything. Now, what are the issues that can come up when you check some of these documents or when you check some of these records? Now, consider this case where FINRA has a significant accounting policy which can say revenue is recognized on appropriation of goods to the contract. Sir, abdina enna sir? Abdinaka. Revenue is recognized by Fraser and Ross for the purpose of recognizing sales when appropriation is made to the contract. That means Fender has got a contract for supply of 5,000 rupees worth of goods. நான் என்ன பண்ணுவேன்? Manufacture பண்ணிட்டு, சுவாமி இத தனியா வச்சிருப்பா, this is going to Bangalore International Airport conveyor belt systems, தனியா appropriate பண்ணி வச்சிருவேன். Bangalore International Airport என்ன சொல்லுவான்? சுவாமி நீ அனுப்பாத, என் சைட் ரெடி இல்லாமா. But it is appropriated to the contract, so Fraser and Ross will recognize revenue. So what is the note that you are giving in significant accounting policy? Revenue is recognized on appropriation, but be careful. Invoice இல்ல, e-sugam இல்ல, way bill இல்ல, packing slip இல்ல, ஒண்ணுமே இல்ல. Sales 5,000, 3B0, assuming there is only one sales, 3B0. எப்படி சார் இது? Balance sheetல 5,000 இருக்கு, sale காட்டல. These are the problems. You have to be careful about policies, significant accounting policies that are stated in the notes to accounts. So these are called connecting statements. They connect the financial statements with allowed loss. So they are called connecting statements. Second note என்ன சொல்லலாம்? Revenue is recognized on dispatch of goods. அப்படிமா இன்வாய்ஸ் போட்டுடலாம். 28ஆம் தேதி மார்ச் இன்வாய்ஸ் போட்டுட்டான். ரெவென்யூ இஸ் ரெகக்னைஸ்ட் ஆன் டிஸ்பேட்ச். டிஸ்பேட்ச் ஏப்ரல் 2 அன்னைக்கு ஆகும். சார் இ-வே பில் ரேஸ் பண்ணிட்டேன் சார். சார் மார்ச் 22 அன்னைக்கு இன்வாய்ஸ் நான் போட்டுட்டேன் சார். லாக்டவுன் ஸ்டார்ட் ஆயிடுச்சு சார். Goods are moved only on April 20th. When will you account? What is your stated policy on this on March 20th? I'm sorry, on March 31st. Be very careful when you deal with these transactions. Therefore, you have to check for dispatches. Now, what is the implication for the supplier? What is the implication for the recipient? Consider this case. 30th March, Gujarat land from Vapi, goods are left and it has reached Madurai. For example, to reach Madurai, it will take 13 days from Vapi in Gujarat to Madurai in Tamil Nadu. It will take 13 days to reach. Gujarat lo 28ஆம் தேதி invoice போட்டு March 28 போட்டு upload பண்ணிட்டா. It is appearing in GSTR 1A. It is appearing in 2A. அவங்க ஒன்ல அப்லோட் பண்ணிட்டா in 2A வந்துட்டு. எனக்கு invoice வரல, goods வரல. It has come only in April. Abhinaya madam என்ன பண்ணலாம்? She has 3 options. Sir, 2A பின்னுக்கு தெரியுது மாஸ்ல எடுத்து விடலாம் சார் கிரெடிட் ஆப்ஷன் 1 என்னவா இந்த மாதிரி அநியாயமா இருக்கு குட்ஸே வரலையா அப்படின்னாக்க சார் இங்க 2A இருக்கே சார் எடுத்து விடலாம் சார் எடுத்துட்டாக்க financial accounts like entry வரணும் goods in transit. Be careful. When goods are in transit, you cannot claim input tax credit because one of the condition for availment of credit is receipt of goods. If you don't receive goods, there is no credit that you can avail. So be careful when you are going to pass these entries in the books of account. Next, be extremely careful about the kind of transactions that you will have to deal with. Right? Now, you have to understand the client's business. If you don't understand the business, you will never be able to do an audit. You have to look at the nature of industry. For example, if you have to understand the client's business. Now, let me give you one example of hotel business. Hotel business. Hotel business la enna aga? Abhinaya madam, college house பக்கத்திலே இருக்கு. College house போனாக்க room number 101. 1,500 rupees ma. Room number 102, 850 rupees ka Abhinaya madam kudwa. Madam, இந்த மாதிரி அநியாயமா இருக்கே 101 is 1,500, 102 is 850. Both are occupied on the same day on 25th of June 2020. How can one be 1,500? How can the other be 850? I will put you on valuation principles. எப்படி சொன்னீங்க 101 1,500 கொடுத்திருக்க 102 same room same day two different persons one fellow was given at 850 another fellow was given at 1,500 Abhinaya madam சொல்லுவா sir the I say the yearly we book around 100 room nights therefore in discounted price sir என்ன மேடம் 100 room book பண்ணாக்க டிஸ்கவுண்ட் வரணும் ஒரே ஒரு room book பண்ணா டிஸ்கவுண்ட்ல 1,500 சரி முதல்ல மீனாட்சி அம்மன் கோவில் தரிசனம் பண்ற ஃபெஸ்டிவல் நடக்கிறத ஏன் 3,000 ரூபாய் கொடுத்த அன்னைக்கு வந்து you given to I say 2,000 rupees. If I get one example like that, you are finished on valuation. Please be careful. You have to be very, very clear about client's business, how it operates. So nature of the industry becomes very, very important. Nature of the transaction that is carried out. Please be very careful of the nature of transaction. Now, what is the nature of transaction? A nature of transaction can be a loan, a nature of transaction can be a barter, a nature of transaction can be an exchange, a nature of transaction can be both an exchange and a barter. Now, I will give you an example. What is the nature of an example? For example, take an electronic showroom in Madurai. Abhinaya madam will tell you, if you go there, they will tell you, sir, you return your old Bosch washing machine, I will give you a new TVS Whirlpool. Swami, பழைய washing machine கொடுத்துரு, புது washing machine கொடுக்குறேன். பழைய washing machine, if you give, I will give you 2,000 rupee discount. One option. Two, you give me washing machine, you can buy television. No problem. அதுக்கும் கொடுப்பேன். Now, whether it is an exchange, whether it is a barter, whether it is a discount, or whether it is a settlement, please be careful. Whether there is one supply or whether there is two supplies. Now, the exchange, the Abhinaya madam என்ன பண்ணிருப்பா 10 வருஷம் யூஸ் பண்ணிருப்பா அந்த வாஷிங் மிஷினை அது பிஞ்சு போய் வயர்லாம் தனியா வந்து அது என்ன பண்றதுனே தெரியாது. Now, if you treat that as an inward supply transaction, books of accountல entry இருக்கான்னு பார்க்கணும். Books of accountல அவன் என்ன பண்ணுவான் இந்த வாஷிங் மிஷினை மாடிப்படிக்கு வெளியில போட்டு வச்சிருப்பான். சுவாமி இந்த வாஷிங் மிஷின் வந்துருக்கு எவ்வளவு தூக்கறதுக்கே பைசா கொடுக்கணும்னு தூக்க கொடுக்க மாட்டான். அது யாருல கொண்டு போட்டுருவான். புக்ல என்ட்ரி இருக்காது. How are you going to treat this nature of transactions? Please be very careful. Whether it is barter or whether it is exchange, how you are going to pass entry in the books of accounts become critical. Entity structure. Many times what happens is, for example, Fennel Group 20 company இருக்கும். 20 company இருக்கும். ஒன்னு மணிமேகலை மேடம் கொடுப்பான், இன்னொன்னு வந்து he will give it to Abhinaya madam. So you don't know whether they are related parties, whether they are friends, whether they are enemies, whether they are different companies. You have no idea who is holding whom. So you have to be careful about the entity structure if you have to decide on the taxation and valuation principles. So appointment letter, audit program, checklist, ella. It is there in the technical guide. Please look at the technical guide. You have everything. If you follow that, you would have done a fantastic certification process so far as your GST is concerned. Accounts and records. என்னெல்லாம் பார்க்கணும் outward supply, inward supply, அது இன்னும் 5 bill பார்ப்பீங்க, there is no doubt. Input tax credit, be careful. Here it is availed. Be careful. Availment and claim are different. Eligible and ineligible are different. Claim and reverse are different. Not allowed is different. Ineligible is different from all of this. Please be careful. Ineligible na threshold eligible. For example, you are ineligible to claim input tax credit, ineligible to claim input tax credit on gift. Again, you claim to reverse claim you cannot claim it at all. Only then availment or reversal. Stock of goods received and supplied. Please be careful. Opening balance, closing balance, stock. Please be careful. Gift to free, samples, closing stock. I gave you all these examples. Documents, record of import of goods and services. There is absolutely no difficulty in understanding the records for import of goods, but for services, you will have no record. Please be careful. Now, I will give you an example of annual maintenance contract. Let us say Federal India has entered into an annual maintenance contract for maintenance of its plant and machinery. Madam, Federal has entered into an annual maintenance contract for maintenance of its plant and machinery. No difficulty. The moment you enter into AMC for your computer and computer services, அவன் வந்து first day bill கொடுத்துருவான். The fellow will give you a bill on the first day for 12 months. The question is, can you claim input tax credit? If you say yes, I have a problem. You say yes, I have a problem, because he has given you an invoice for 12 months, you have effected payment for 12 months, but he is rendering service over a period of 12 months. How can you claim input tax credit in month 1? You cannot claim input tax credit on month 1, because one of the conditions for claiming input tax credit, be careful, claiming input tax credit is a receipt of service. The question is, have you received service? No. Sir, மாசம் 12 மாசம் வரும். Next question கேட்பேன். லாக்டவுன்ல என்ன ஆச்சு அப்படின்னா, மேடம் சார் 2 மாசம் ஒண்ணும் கிடையாது, 2 மாசம் இன்புட் டாக்ஸ் கிரெடிட், தேங்க்யூ, யூ ரிவர்ஸ் இட், டோன்ட் டாக் அப்படின்னு சொல்லிட்டு போயிட்டே இருக்கணும். Whether these entries are passed in the books of account, please be careful. You cannot claim. In my view, you cannot claim input tax credit. But if you claim after 12th month, time would have expired. So the best is you enter into a contract, tell him to give you a monthly invoice. This is the solution, right? So you have to be very careful. Goods sent to job worker, etc., etc. Now all these you would have completely read insofar as these transactions are concerned. Now in respect of works contract, I told you earlier that these are continuous supply of services. Those of you who have contract accounts, importantly government contracts, if you are doing audit of government contracts, you cannot pay tax on receipt basis. It is 233. It is continuous supply of services. It is month on month. It is irrespective of whether you have raised your invoice on the government or not. You are required to pay your tax on monthly basis. It is only accrual system of accounting, and there is no longer receipt basis of accounting. Those of you who are probably doing audit of contractors account, be careful. There is percentage of completion method, completed contract method. Here there is no method. GST law is plain and simple, accrual method. As simple as that. There is no other way you can record transactions. These are some of the reports which you should come for and look at. In respect of outward supplies also, I have told you what all you should be seeing here. Please be very, very careful. Goods intrastate and interstate. Most of the people make mistakes in respect of interstate and interstate rate when they are rental transactions, when they are contract transactions. If they are rental transactions, there is a tendency to give an IGST invoice because client will not be registered or customer will not be registered in Madurai. காலேஜ் போயிட்டு சார் ஒரு ஐஜிஎஸ்டி போட்டு கொடுத்துருமோன்னா கொடுத்துருவாங்க. ஐஜிஎஸ்டி போட்டு 18% கொடுத்துருவாங்க ரூம் ரெண்ட்டுக்கு. But that fellow will be in trouble. Because the property is located in Madurai, he has to charge CGST, SGST. If you pay the wrong tax, you will be held up under section 77. You have to pay the correct tax and then go for refund. It is multiplicity of payment of taxes. Services, please be careful. In services are extremely difficult to handle. Goods, at least you can touch, feel, see, go, inspect, you can do something. If I were to ask you a question, sir, UNC service காரன் வந்தானா அப்படின்னாக்கா, சார் இந்த மாதிரி கொஸ்டின் யாருமே கேட்கல, நீங்க தான் சார் ஃபர்ஸ்ட் கேட்கறேன். Because if he is not rendered service, you cannot claim credit. Yes, to render service. சார் போன மாசம் என் கம்ப்யூட்டர் பிரேக் டவுனே ஆகல, வரவே இல்ல அப்படின்னாக்க, மேடம் இன்புட் டாக்ஸ் கிரெடிட் 1/12 ரிவர்ஸ் பண்ணுங்க அப்படி இல்ல. Because no service is rendered. No service is rendered. Reverse it. But if you say service is rendered, மேடம் அந்த ரிஜிஸ்டர் கொடுத்துங்க, யார் வந்தா, அவன் எம்ப்ளாயி நம்பர் என்ன, எந்த கம்ப்யூட்டர், இந்த கம்ப்யூட்டர் ஏஎன்சில இருந்துதா, அது எல்லாம் கேட்பேன். நெக்ஸ்ட் சார் நீங்க வரவே வராதீங்க சார், டோன்ட் கம் ஹியர்னு சொல்லிட்டு உதச்சு வெளில அனுப்பிடுவீங்க என்ன. So please be extremely careful. If I am the commissioner, I will ask you all of these questions. Next, outward supply registers. This is absolutely simple. There is absolutely no difficulty at all in respect of maintaining these outward supply registers. I will leave this. You can check this and then go ahead with it. Now, here are some of the basic issues that arise in respect of outward supplies. Madam, how much time do I have?
So you please carry on, sir. If it is, if you want more time.
I will carry on. I will need another 10 to 15 minutes. Is it okay?
Yes, sir. Yes, sir. Yes, sir. We have received only 3 to 4 questions. I think so that you can take it.
Absolutely fine. No problem. So I will take 10 to 15 minutes. Thank you very much.
Okay.
Now, the implication of capital goods transfer. Now, the same example I will tell you. If Abhinay madam were an employee with Finner and she is given a laptop, and that laptop she will carry and go to Hyderabad to do work for Finner Hyderabad and come back after 3 months. Therefore, the question is, should you raise an e-way bill? Is there a transfer of goods or stock transfer from one state to the other? Is it taxable? Is it not taxable? How do we handle this? Because software engineers go from A city to big state every day night. அவன் பஸ் ஏறுவான், மதுரையில இருந்து பெங்களூர் வந்துருவான், மதுரையில இருந்து சென்னை போவான், சென்னையில இருந்து பாண்டிச்சேரி போவான். இதுக்கெல்லாம் டாக்ஸ் போட்டு இருந்தா தலை கெட்டு போயிடும்பா நம்மளுக்கு. But you decide, state that policy. Is an employee who is given, note it, give a note. Then you say there is no liability to tax or we have not captured tax. No difficulty at all. Laptop carried by employees from branch to branch, temporary or permanent. On transfer, what will happen? If Abhinay madam is transferred from Madurai Fennar to Hyderabad, then you will have to pay tax. But if she is carrying for the purpose of executing work and coming back, there is no requirement. Goods sent on job work is over. Deemed supply without consideration. Please be careful. Supply between related persons and distinct persons. Last bullet point. This is called stock transfers. But before that, you find permanent transfer or disposal of business assets where input tax credit has been availed. Now these are Schedule 1 transactions. They said that these are liable to tax. For example, if Abhinay madam is running an office, she says in the computer 4 வருஷம் பழசு ஆயிடுச்சுப்பா, சுவாமி இதை அங்க போயிட்டு மதுரை பப்ளிக் ஸ்கூல்ல கொண்டு போய் டொனேட் பண்ணிடுறேன் அப்படின்னு கொடுத்தா, it is a permanent transfer or disposal of fixed asset. Therefore you have to pay tax on that. என்ன சார் இது அநியாயமா இருக்க, கம்ப்யூட்டரே கொடுத்துட்டேன், அது மாதிரி டாக்ஸ் வேற கட்டணும் மேடம், என்ன பண்றது? This is the law. So if Infosys is donating 5,000 computers, it's very unfortunate. They have to pay tax and they are paying tax. So also, if you donate your computer, if you donate your table or chair, permanently dispose of your asset, table உடைஞ்சு போச்சு அப்படின்னு தூக்கி ஆபீஸ் வெளியில தூக்கி போட்டாக்க, it is permanent disposal. Therefore you will have to pay tax. Supply between related parties. If you look at related party transactions and perhaps go back to Rule 28. Rule 28 says where stock transfer happens between A state and B state, the value in the invoice will be allowed, provided the recipient is entitled to full input tax credit. Please be careful. You can't take shelter. ரூபாய்க்கு வாங்கிட்டு 40 ரூபாய்க்கு ஸ்டாக் டிரான்ஸ்ஃபர் பண்ண முடியாது. You cannot do it. 100 ரூபாய்க்கு வாங்கினா 100 ரூபாய்க்கு தான் ஸ்டாக் டிரான்ஸ்ஃபர் பண்ண முடியும். Please go back and read Rule 28. Rule 28 says if open market value is available, that is the value. If open market value is not available, then the invoice value shall be the value for stock transfer. Therefore, semi-finished goods you have a case, but for finished goods which are stock transferred, you have to apply market value and you cannot transfer it at a price lower than the market value. Next, your turnover as per audit and analysis, checks and controls, you will have to be extremely careful. Checks and controls, please be very careful for credit notes. This credit notes is a very big problem. I have always told you that this credit note is painful. So please be careful when you have pass entries for this credit note. Confirmation is really required from the recipient. I have enough of credit notes. I will skip this. Next. After credit notes, what do we have? Turnover as per audited versus financial statements versus analysis. Please be careful. 17, 18, 18, 19. Let me make it absolutely clear. No figure will match with any figure. Nothing will match. This is clear. Because first 3 months was VAT and excise period. The next 9 months was GST period. 17, 18 financial year, that is a 9-month ended financial year under GST period. Credit notes would have been issued much after the end of the year. VAT period credit notes would have come in GST period. GST period supplementary invoices would have come subsequently. I mean, VAT period supplementary invoices would have come in GST period. Please be very, very careful when you are going to deal with these transactions. You have to be extremely careful when you handle these transactions. Importantly, you have to match trial balance because the department has now started asking for trial balance state-wise. GST and wise, you are required to maintain trial balance. Financial statements 1, 2A, 3B, 9, 9C, trial balance. தள்ள கெட்டு போயிட்டு ஜுப்புன்னு நமக்கு இந்த வேலையே வாண்டாண்டான்னு தோணிடும். ஏன்டா இதை எடுத்துட்டோம் 10,000க்கு. Please be extremely careful. It is not going to work. Now, in these 2 or 3 tables, I've given you some examples of how to overcome difficulties and which column you should probably put it in. Please read this. It is very easy. It is very simple. Therefore, you don't need to worry at all. Right? Please read that. You will understand. Now, some of these checkpoints. What do you mean by checkpoints? Why should we check? Here I said, what are the checkpoints in respect of audited financial statements? Turnover declared for different registrations. Now take Fenner for example. They have 20 branches across India. Their statements, their financial statements are consolidated. They may appoint 20 different child accountants in 20 different states for conduct of GST. Abhinaya madam என்ன சொல்வா? சார், அந்த வெள்ளத்தல வெங்கட் சார் பெங்களூர்ல உட்கார்ந்துருக்காரு, அவர் பார்த்துருவாரு, நான் இதெல்லாம் ஒண்ணும் கட்டமே பட வேண்டாம், மதுரை பார்த்து என்ட்ரி போட்டு 10,000 வாங்கிட்டு போயிடுவேன் சார். நான் என்ன பண்ணுவேன்? நான் வயசானவன், அப்பாடி அபிநயா மேடம் கேன் டூ ஆல் திஸ், நான் ஏன் ஆடிட் பண்ணிட்டு நான் கைடுவேன். 20 பேரும் இதே பண்ணினா, if you are going to total around 20, it will be 2 times your balance sheet figures. Please be careful. Don't think that you can rely on somebody else. Each of you have to talk to the other and then look at how you are going to match. Please be careful of how you are going to match. Importantly, stock transfer transactions will not get reflected in financial statements because it will get nullified. It will get neutralized. It is revenue neutral. For the purpose of the entity, it is entity as a whole. Now, financial statements are not audited. நான் சொன்னேன், என்கிட்ட ஒருத்த வந்தான், சார் 17, 18 எனக்கு ஆடிட்டர் கைத்து போட மாட்டேன்னு சொல்லிட்டாரு சார். ஏன்டா சொன்ன ஆடிட்டர் கைத்து போட மாட்டேன் சார்? இது சரியில்லை, அது சரியில்லை, இது சரியில்லைன்னு சொல்லிட்டாரு சார். நீங்க எனக்கு GST கையெழுத்து போட்டு கொடுத்துங்க சார் அப்படின்னா. So I can proceed conducting an audit under GST law. You may have a different problem under income tax law. That does not mean GST is not all right. I may continue to do a certification under GST. If for any reason financial statements are not audited under any law, the auditor must engage himself based on financial statements. For example, you have some what can ad hoc scheme under income tax law. Declare 8% of turnover, no need of audit. Swami, bank passbook total board 8% declare karna, matter close. Under the case law, how you are going to do audit? Please be very, very careful. Turnover declared in GST returns to be reconciled with income tax returns. You have to reconcile. You have no choice at all. Unbilled revenue. Please read this. This is extremely simple concept. What is unbilled revenue? Unbilled revenue na Swami dispatch to goods illa goods manufactured appropriate panyache. The example that I gave you, Finnair has manufactured conveyor belts for Bangalore International Airport, manufactured, kept ready in Madurai. But Bangalore International Airport says, don't dispatch. I have COVID problem. I will not be able to install. Revenue is recognized on appropriation to the contract. Please be careful. That will become unbilled revenue. Unbilled revenue, you have to disclose in 9C. This is unbilled revenue. This is unbilled revenue. Where are it? For example, 31/3/2020, number retailer invoice raised service is already provided. Invoice you will raise next month. That is unbilled revenue. Please be careful. Where service is provided, goods are supplied, but you are not billed. Why you are not billed? Madam Solva, sir, this rate negotiate ஆயிருக்கு. நீங்க 8 rupees per piece போட்டா invoice clear பண்ண மாட்டேன். You supply the goods. E-way bill போட்டாச்சு, packing slip போட்டாச்சு, delivery challan போட்டாச்சு, goods are gone. Invoice மட்டும் அடுத்த மாசம் கொடுங்க சார் அப்படிமா. That is unbilled revenue. Please be careful. Unbilled revenue. You have to be careful. Disclosures have to be very clear. I've given here in which column you have to disclose. It is already there. Advances. Please be very careful. This advance importantly in the case of contractors. Please be careful. Contractors receive substantial amounts as advances. You will have to be extremely careful of how you are going to deal with or treat these advances in respect of contractual obligations of supply. Please be extremely careful. Otherwise, you will not be in a position to deal with unadjusted advances at the beginning and at the end of the year. You will not be able to. Now, to give you an example, if there is a 100 crore contract, an advance 50 லட்சம் 20 லட்சம் 30 லட்சம் 40 லட்சம் கொடுத்துட்டே இருக்கான். At no point in time, the bill will be reconciled. Our bill reconcile பண்ணிட்டு unadjusted advances, whether it is pursuant to supply or not pursuant to supply, you will have to be careful, and then you will have to take input tax credit. Deemed supplies, these are stock transfers, permanent disposal of fixed asset. I given you both the examples. Donation கொடுத்தாலும் tax கட்டணும் சுவாமின்னு சொல்லிருக்கேன். Table வெளியில் தூக்கி போட்டா கூட you will have to pay tax னு சொல்லிருக்கேன். Stock transfer, pricing I have discussed, valuation I have discussed. Now these are deemed supply transactions. That means law treats this as a supply. Related party transaction, law treats this as a supply. So you have to verify transfer pricing report. Staff welfare expenses, please be careful. Whether it can become related party, please be careful. Whether it is staff welfare or whether it is business promotion, think 5 times. If it is staff welfare, it can be a related party transaction and you have to disclose that and pay tax. Please be careful. Staff welfare debit ஆகுது, ரொம்ப careful. இட்லி வடை சாப்பிட்டு staff welfare னு போட்டா check பண்ணிடுவேன், tax போட்டுருவேன். Be very, very careful of what you are going to book in the accounts. Next, adjustments to turnovers where reasons are not listed. There are 1 or 2 adjustments here. Please read this. This absolutely simple adjustments can be considered as a supply in some of these cases, and those cases have been listed out in 5O. Reverse charge, I don't have the time. I'm going to skip that. Input tax credit. There are 2 or 3 issues that I want to deal here before I say, before I close my session. Now, detailed examination of purchase register of GST is required. Now, this 180-day transactions, please be careful. நீங்க டிசம்பர்ல போட்ட இன்வாய்ஸ், அபினியா மேடம், I am very, very clear in what I am saying. டிசம்பர்ல அனுப்பிச்ச இன்வாய்ஸ், that is November supply, invoiced in December, COVID mala, nobody has made payment. Payment varla. Now if you apply 16(2) proviso, you have to reverse the input tax credit. ಈ ರೀತಿ ಕಷ್ಟದ ಕಡೆ ಮೂಡ್ಲಾಂಗರ நேரத்துல சுவாமி நீ input tax வேற reverse பண்ணிடாங்கற இது என்னடா நம்ம கஷ்டம். But this is the provision. He says if you don't effect payment within 180 days, you have to reverse your input tax credit. Now what happens in case of COVID? Goods are received in February, payment is not affected. Swami kadave tarakla, ನಾನು manufacture பண்ணல, நான் பண்ணி நாலு ஏதாவது வித்தாதான் உனக்கு கொடுக்க முடியும், நீ என்ன ஆள் விட்டுருப்பா, வேண்டாம்னா நீ February சப்ளை பண்ணி இங்கே இருக்கு, பொட்டி பொடிக்கோட நீ தூக்கின்னு போயிடுன்னு சொல்லிடுவேன். Then life becomes extremely difficult. You don't want to take it back, but at the same time you don't have money to pay. Third case, 180 days is over, therefore you have to reverse input tax credit. All these are headaches, all these are problems. You need to handle this under GST law. I will not reverse. If I am the auditor, I will not reverse in respect of 180 days. Please be very careful. Why I will not? Because if you read second proviso to section 16, subsection 2, clause C, it says where the recipient fails to pay. Failing to pay means there must be an obligation to pay. If there is no obligation to pay, there is no failing to pay. If I tell Abhina madam, you have to give me 10,000, sir, yes sir, Yanna sir, Nana sir, Yapudi sir, again. So there must be an obligation to pay. If there is no obligation to pay, she has not failed to pay. When will Abhinaya madam fail to pay 10,000 to Venkat? That means you must say, sir, உங்களுக்கு 10,000 ரூபாய் fees due sir, June மாசம் கொடுத்துடுறேன் sir. June மாசம் if you don't give, then you have failed to pay. If my obligation itself is 300 days, the question of 180 days does not arise. Please be careful, tweak your purchase orders accordingly. You will be able to handle it. These are very, very small issues. I don't want to check. I don't want to take your time. Next, ITC verification. Some one or two crucial issues. Please be careful. Check eligibility, ineligibility, availment, claim. Please be careful. I have used all of this in the 6 or 7 bullet points. Check eligibility versus block credit availment, verify claim versus reversal, supply returns versus credit notes. Now each of this has got a different connotation. Please be very, very careful when you claim input tax credit. Next, what can you do? What can you do? Others, you have to do some ratio analysis. You have to compare previous year's financial statement reports 9C, do some sampling, documentation. When you give notes to accounts, please be very careful of 9C. If you have done sample checks, don't hesitate to give. Say I have checked only invoices above 25,000. Say I have checked only 50 invoices. Say I have checked only iron and steel invoices. I have not checked aluminum invoices. No difficulty. Please say it in your notes to accounts. In the examples that I gave you, bearing, vast line, binoculars with camera, take an opinion from an expert before you become an expert. Take an opinion, tell him to bring it, then you say it, see if you can certify. Management representation will not absolve you. You are required to check. If you cannot check, where you have an implicit confidence, only then management representation will come to your rescue. Otherwise, certificate of practice will go. Please be careful. Erroneous refund payments, if any. There are too many refund frauds. Please be careful when you are certifying 9C. Obtain copies of notices issued by the tax office, reply filed, etc. Check if appeals or anything has been filed. Thank you, ladies and gentlemen. Thanks a lot. Thanks a lot. Madurai branch for having given me this opportunity to spend some time with you in making you understand the implications of 9 and 9C. I know that I have rushed through 9 and 9C. This is the best that I could do in 2 hours or 2 hours 15 minutes. I think the entire process of annual return and audit will need at least 6 to 8 hours. Without that, you will not be able to do justice. I have done my best. Manimelli madam, Abhinaya madam, I have used your name many times. My profound apologies, Manichunga. There was no intent. I have used you as supplier, I have used you as recipient, I have used you as auditor, I have done everything with the two of you. I'm so sorry. There was no intent. It was just this two names that I used so that people can understand better. Thank you so much. If I have hurt anybody, there was no intent to hurt the profession or any chartered accountant. It is just the passion for law that has come out. Thank you so much. Thank you.
Thank you, sir.
Yes.
Sir, you can stop sharing your screen, sir. We'll go to the question and answer session.
How should I stop sharing now?
Sir, you can see in the sharing right end.
Sharing okay.
Stop sharing.
Stop பண்ணிட்டேன்.
Okay. Okay, sir, we'll move into the question and answer session.
Yes.
Sir, whether shall I read the questions or whether you can read it from the chat box, sir? How it is comfortable for you?
Chat box in the
chat. I've pasted all the questions, sir. Which is
okay. The first question I will read. Okay. Let me see. Okay. Instead of reversing ITC under Rule 37, that is the first. Yeah.
Yes, sir. Yes.
Instead of reversing ITC under Rule 37, can we pay interest on the amount of ITC outstanding beyond 180 days since there is revenue neutrality? How is it possible? No, I want you to reverse. If you reverse, I will get physical tax. Abhinay madam, please understand. இப்போ என்ன பண்ணிட்டு இருந்தீங்க என்னோட 10,000 ரூபாய் உங்கள்கிட்ட இருக்கு சரியா ஏன் 10,000 உங்கள்கிட்ட இருக்கு நீங்க என்ன சொல்ற சுவாமி இது என்கிட்ட இருக்கட்டும் நான் 1% இன்ட்ரெஸ்ட் கொடுத்துடுறேன்னு நோ இட் இஸ் நாட் பாசிபிள் உன் 10,000 ஃபர்ஸ்ட் வாபஸ் கொடு மேடம் நானா நீ 10 கொடுத்துருங்க அதுக்கப்புறம் நீ வேற யார்கிட்ட you take a loan not possible whoever has asked this question nothing doing you can't retain the money and pay interest you have to reverse if you reverse then automatically you will come to a payment situation you pay the tax then you claim the refund so it is not possible 1% interest is not possible it is not revenue neutral whether auditors should quantify the amount of liability in GST or 9C become actually yes fantastic question now if there is a wrong classification it's important that you quantify and qualify you have to do both but be careful before you quantify and qualify for wrong classification you are putting your client in deep trouble be very careful and how are you an expert on classification you are not an expert on classification for example if I were to ask Manimelia madam you are wearing an earphone is it computer part or is it mobile part அதே இயர்போன் தான ரெண்டுக்கும் யூஸ் பண்றீங்க நீங்க கம்ப்யூட்டருக்கும் அதேதான் மொபைல் போனுக்கும் அதேதான் then if I were to ask you a question whether it is computer parts mobile part how will you say whether it is part of a computer or part of a mobile you have to be expert in classification only then you should venture into this otherwise please give an appropriate note on what you have placed reliance upon and move on with the classification issue you will live to fight another day but if you quantify and qualify client is finished please be careful for example Siemens may be classifying this earphone as electronic goods whereas Dell will classify this as computer parts iPhone that is Apple will classify this as mobile parts it is the same product that is available please be careful charger it is the same charger that is available please be very careful when you are going to take these calls I don't have a ready-made answer if you give me the product I will tell you what you have to do whether a registered person is liable to reverse ITC paid on common inputs used for manufacturing taxable goods and incidentally a byproduct will also be manufactured which is exempt goods as per section 17(2). No I will tell you to apply rule 41 first apply rule 41 then apply rule 42 when you apply rule 41 one portion of the input tax credit is removed which is used in the manufacture of exempt goods this exempt goods in your case incidentally is a byproduct that's all incidentally I will tell you, apply that ratio of taxable versus exempt. Remove the taxable portion. Then in respect of common credits, apply rule 42. You can't apply 17 in this case. You have to apply 41 and 42. However, registered person's intention is to manufacture only taxable goods. Adu eppadi sir adu? Na solren. Now, Abhinaya madam, what she does, her intention is to manufacture only bread. Her intention, she says, sir, in Uttudun sir, na bread da sir manufacture பண்ணுவேன். But what she does, she has that wheat flour. She says, வேணா ஒரே ஒரு கேக் பண்ணி பார்த்துடலாமா இதுல அப்படின்னு. The moment you attempt it, your intent is to manufacture bread, but there is a taxable commodity that is emerging. So here, your intent is to manufacture only taxable, but the byproduct is exempt. Therefore, apply rule 41 and 42. 17 to not possible. Please apply 41 and 42. Next, whether a person registering undivided share, separately and entering into building contract will all fall under 1% or 5% or 18%. Sir, either 4 hours, but I will tell you in for 1 minute at least. A person registering undivided interest of share in land. Please be careful. There are 3 methods of registration. 1, registration of the agreement. 2nd, registration of the sale deed. 3, registration of only UDS. All 3. If you register the agreement to sell, then you become a normal developer, less 1/3. If the project has commenced, if it is a new project, that means project has commenced after 1/4/2019, then you pay tax at the rate of 5%. If it is residential, 1%. If it is affordable, 18%. If you are a contractor, if it is pre-1/4/2019, 18%, 1/3 deduction, which means 12. You pay tax at the rate of 12%. So be careful when you are going to register undivided share of interest in land. Invoice dated July 18. Okay. ITC
Sir,
not.
actually, this invoice dated July 19. 19, it has been wrongly typed as July 18.
Okay, July 19 begin, ma'am. Okay.
Yes.
Dated July 19. ITC not shown in 2A. 1920. ITC not shown in 2A. Why? That means it's not uploaded. So told the supplier, he amended his B2C. B2B in April 20 only. Whether this ITC will come in 2A in 19 or 20, it will come in 19. Don't worry. That error has been rectified by Infosys. It will appear in July 2019. There is absolutely no difficulty at all. It is an error. It has been brought to the notice of the GST Council. Please check after some 2 weeks, it will appear. Right? So it is July 2019, await the credit. Report in 9, once it comes in 2A, there is no difficulty. If it still appears, claim the credit, give a note in 9C by saying that inadvertently it is not appearing, issue a CS certificate, claim the input tax credit, don't lose it. Don't lose that credit. Next. Sir, for a charitable institution running schools and colleges, they made an arrangement to collect rent from the schools and colleges for the premises. Okay. This rent is only to claim expenditure from the schools for submitting to the fees fixation committee.
Education department.
In the education department, it fixes the fee to be collected. But in the case of the main institution, when income tax return is filed, the effect will be nil because rent collected will be offset by against rent paid by schools and colleges. Kindly clarify whether this institution actually has. Please look at this transaction very carefully. There are 2 transactions. One, receipt of rent, the other is payment of rent. Right? There are 2 cases. Therefore, in respect of receipt of rent from its institutions, the main institution is collecting from its subsidiary institution. Now, all of these may be considered to be branches. They may be considered to be branches because they become related party transactions. In my view, it will become taxable. Abhinaya madam, you want to modify the question?
Sir, sorry, sir.
Does the person who has asked the question want to modify my answer?
Sir, 1 second.
Who is that person? Did you get my answer?
Yes, sir. She is Vimala madam, sir.
Is she
Question
there?
raised by
Is she
sir.
not there?
I think she's there, but she couldn't be able to speak it, sir.
Or she won't be able to speak. Okay. Check with her. Otherwise,
Yes.
give her my mail ID. Give her my mail ID. I will help her out. Right?
Okay.
But this is the problem. Be careful. Entire Tamil Nadu, you will have this problem.
Okay, sir.
They will have difficulty. Right? Next, if an entity is not audited under any other law, then GST or 9C cannot be issued. Why? Why you cannot issue? I will tell Mani Meghala madam to issue 9C. Why? I will tell Abhinaya madam, don't sign 44AB. Don't sign. Don't sign. What will happen? Stay will not fall down. Nothing will happen. Sign your return without 44AB. What will happen? 1 lakh is your fine. Huh? Whatever, madam, 1 lakh or 2 lakh, whatever is your fine is your fine. Under income tax law. Audit under GST. What is the difficulty? I don't see any difficulty. Prepare a profit and loss account balance sheet. Don't file audit report under 3B. Upload it. What will happen? Income tax officer will levy 1 lakh. Pay that 1 lakh. Get it audited under 9C. I have done 5 cases. What is the difficulty? I don't see any difficulty. The assessee will face the problem under some other law. So why are you getting worked up? Sir, ಅವನು 44AB report ಇಲ್ಲ sir. ಅವನ company law report. ಅವನ company law report ಅವನು ಪಾಪ he will take care of his company law and 44AB. Don't worry about that. You do your 9C, but disclose saying that company audit not done, 44AB audit not done. If a school sells notebooks, uniforms can be treated as composite supply. 100%. Yes, these are composite transactions. I mean composite supply transactions. That part of the transaction, it will become liable to tax. Please be careful. Don't sell notebooks. Notebook is exempt. Therefore, you will be lucky. If you sell uniform, if you sell writing material, what is it, geometry box, you can get into trouble. Please be very careful. Use a third-party source to get into this transaction. Whether a temple selling darshan ticket should take registration, there was that exemption which came in respect of temple prasadam. Very unfortunate that darshan, the tickets are liable to tax. There is no specific exemption. Only prasadam is exempt. Darshan is taxable. Some temples collect entry fee as donation. Whether still GST is applicable? No. Because if it is an admission, if it is an admission fee for the purpose of entertainment or saying your players, it is only 500 rupees and above that is taxable. So instead of telling darshan tickets, you please say it is entry fee. Up to 500 you will be exempt. Take advantage of that because the exemption notification is up to 500 rupees. Thank you, Mani Meghala madam. Thank you, Abhinaya madam. Thank you so much for this opportunity. If somebody has the answer to my question, please feel free to circulate my mail ID. Let them send a mail. I promise you I will not charge them, but I will clear their doubts. Thank you so much.
Okay, sir. Thank you. Now I request Mani Meghala madam to propose vote of thanks.
Thank you, Speaker Sir, for the very wonderful session. First of all, let me thank you for accepting our invitation, and secondly, for delivering such a categorical presentation. And you were very clear in what you were telling. And the thing is, I can see in your language, in your PPT, you had still saying language of the report. It should be very clear in what you say. And exactly you maintain that each and every word of you might have reached to each and every person very clearly. There is no doubt in that. Thank you very much, sir. We are really lucky to have you today. And we are really blessed to have you today, sir. Thank you very much. And let me use this opportunity to thank beloved chairman of SIRC of ICI CADC Jain sir for being a constant support to us. And let me thank chairperson CA Abhinay Shri for arranging continuous virtual seminars even in this time of challenge. And thank you members for using this opportunity, and we request you to use to register yourself for the forthcoming sessions and get yourself benefited. Thank you very much, one and all. Thank you.
Thanks a lot, madam. Thank you so much. Thanks a lot.
Thank you, sir. Thank you.
Bye-bye. How do I log out?
Sir?
You log out automatically. I will also log out.
Okay, okay, sir. I log
Okay,
out.
sir. Thank you, sir.
Thank
You
you.
log out first, then automatically it will say leave. I leave.
Yes, sir. Yes.
Okay, sir.